people always say, like, why are you so passionate about what you do? And it's conviction. Like, you can't tell me term, whole, whatever. Like, you can't tell me life insurance is a scam because I seen it change my family's life. Like, this is what I do for a living. I quit my job. I threw my degree in the trash can. I recruited my wife to the industry, and I have other agents who are telling the same story because I've seen how it blesses and help families.
Them niggas scared to make that move. We can't relate to that. I roll the dice, shit. If I lose, I'm gonna be shaking back. Cause lessons learned within the loss just elevate the fact that trial and error just the only way. Ain't no escaping that. I wake up, hit 100 push-ups, then I'm at my route. Check on my stocks, see how they looking, then I'm sliding out. When you start seeing your progression, you stop having doubts. And what's the point of having clout if you can't cash it out? True to this game, and I'm a lifer, ayy. Feel like we finna change the cycle, ayy. That's the most success, you know we thriving, ayy. That's the most depression for our rivals, ayy. Could teach a lesson on survival, ayy. You know I'm from the bottom.
What up with it, Wealth Builders? It's your boy, David Ballard, one of the founders of the Black Wealth Renaissance. I'm here with my brother from another, Jalen Clark. What's poppin', brother?
What's good, y'all? It's your boy, Jalen, man. Another founder of the Black Wealth Renaissance podcast. Man, I'm doing great, dog. Enjoying fatherhood. As I was telling our guests earlier, I've been through a full range of emotions with being a father.
They have been putting you through it, bro.
I'm telling you. I thought entrepreneurship was hard. Like, fatherhood added times 10 to that, dog. It's like, oh, man.
Yeah, bro.
Every minute you think you got it figured out.
Something new?
Something new, man. Like, okay, you like to sleep like this. The next week, you don't like this, though, boy. It's just like, oh, man. But besides that, I'm great. I'm enjoying it, enjoying the experience, really just growing through life with it, man.
Adapting,
on your end, man.
Man, things are going well, bro. You know, kicking off the new year, new energy. Things been rolling smooth. We still in this phase where we continuing to get back into the business. I think people have been able to see us. We've been a lot more present, and I've been enjoying that a lot. Been able to really pour my time into things and get that return that I'm starting to see. And on a personal level, man, a lot of clarity. I've been telling you that I've been doing this juice cleanse since the start of the year. Just my guy Tim Jackson. Shout out Tim Jackson. If y'all listen to the show, y'all definitely heard Tim on a few episodes with us. Tim, he inspired me, man. Bro lost like 40 pounds in 90 days. So I'm like, let me just try this. Just focus on disciplining myself, and like locking in at the beginning of the year with your mindset, locking in on health. Because, you know, you little 6-year challenges on IG, you'll start seeing them shit. So I'm like, God damn, bitch. Shit, I don't look like that. I need to get to work, you know what I'm saying? So, no, but things been good, man. I just, like I said, I've really been happy for the space I'm in, been able to focus and lock in. This episode is no different than any other. Y'all know where we bring you great people who do amazing things. And this couple is no different. You definitely probably seen them if you follow us on IG. Yeah. They are just phenomenal. Dope couple based out of Houston that are working in the insurance industry. They're helping insure our people to help them build generational wealth and helping people build wealth in that industry after taking it from a part-time gig and building it up to a 7-figure agency. We have none other than Chris and Erica Cobb, the founders of the Chosen Agency. How y'all doing, fam?
Hey, good, man. We're excited to be here, ready to see if we can get some game.
Oh, man, you already know you're going to do that, man. Stop that.
It's about to be hot.
Yeah, we about to tear the roof off.
We're excited, though. Glad to be here for sure.
So Chris and Erica, I know I gave a brief introduction to y'all. I always like to let our guests introduce themselves, kind of tell our audience your side of the story.
Okay,
you know?
Cool. So, like you said, my name is Chris Cobb. We're in Houston, but originally born and raised in a town called Hartwell, Georgia. And I know everybody here has probably heard of it, right? But no, I'm just joking with you.
The big city of Hartwell. Yeah.
Even the people in Georgia don't even know where it's at. That's how small it is. It's like, I look at the census. I Googled it this past week. I think it was 4,000 people in 2010. So that's 20, 30 years later. So when I grew up, it was literally like...
It's like a high school in Texas.
It's like a high school in Texas.
The whole city.
That's like Church Point.
Yeah.
Literally.
Yeah, so like growing up there, though, it's funny because like I didn't see a lot of entrepreneurs. I didn't see a lot of people making money. Usually in the public service, you're a teacher, police officer, fireman, or there's a couple plants.
Real blue-collar type community.
Yeah. And it's a couple like plants that literally fuel the whole city, and everybody works for the same plant. And so that's what I grew up seeing. But my whole family was in education. And one day my mom asked me, she said, Chris, what you want to be when you grow up? And I said, I want to be rich.
Good answer.
And she said, don't get an education. So I went the opposite direction. Like my mom, my dad taught, grandparents. One of my grandfathers, he was a professor at HBCU. His dad taught. So literally my whole family's in education. So that's kind of what I saw growing up. But I don't know. I always hustled a little bit. I like business. I like working. My granddad, he did lawn care. I was always cutting grass, hustling, selling jawbreakers in middle school. So I just knew I was going to be in business, an entrepreneur. I didn't know exactly what. But I went to college at UGA, graduated, had $70,000 in student loans. So I'm like everybody else. I'm like, well, what am I going to do? I don't know anything. And then I got recruited by Enterprise. Started working there and was working like 60 hours a week, washing and vacuuming cars. And I'm like, man, this can't be it. Mm-hmm. I didn't spend $70,000 to go wash and vacuum cars.
Hell no.
I learned that when I was like 8 years old. Like I said, I took a step back in that
Especially
scenario.
in a dress shirt and a tie.
Dress shirt and a tie.
And don't get me wrong, guys, you can make money.
It was scrub and
yeah, for sure. In Georgia heat, so like you wear a white shirt, by the end of the day, it's yellow.
God,
all the sweat,
sweat stains under your
shoes, all soaked
why do
up.
you think them people dress like that if they know they're gonna have to do all that? That don't make no sense.
It's the
man.
standard, and you have to wear like hard bottom shoes. You got to dress up, so it's the standard. And I'm not knocking. It was a great experience. If you work there, you're gonna get a good resume. And what happened was working there a couple months. I used to meet so many people and start networking. And a lot of the business travelers, they were always in finance or insurance and stuff. And they always would dress nice too, briefcase. Talking about going to New York this week. I'm going to Miami. I'm in for the town. So it's like, that's kind of the life I want to live. And I eventually got a couple business cards. One of the guys said, you know what, we always hiring. Like, put in the application, man. We like people like you. So I got hired on with another company called Travelers, which was completely opposite. It was corporate, blue collar. You work Monday through Friday, 40 hours a week, 20, 30 vacation days. And it was good too. I loved it because I became an underwriter. So I was making like $50,000, $60,000, 23 years old, 24-year-old. Not married, no kids, so that's good money. But I got stuck at the cubicle, man. Mm-hmm. You know, you there every day, just looking at spreadsheets, no windows around. And I'm also feeling like I'm in a cage again.
Yeah.
Even though the job is cool, it's just like, man, I want to be with the people. I want to see what I really could do potentially. And that's when I got into YouTube and started searching the courses, started following pages like this. And I just seen a lot of people say insurance is one of the most lucrative industries, like the life insurance industry. So what I did was I went and got licensed part-time. So for all the people who are looking at becoming an entrepreneur and you think you got to go all in and you got to quit your job, no, I got my license part-time, started building the business, helping clients, building my clientele. And about 2 years into it, that's when I started having a real conversation because we got married and we were like, hey, we're doing all right. Maybe we should see what we can do, see if we can venture off. But that was years down the road. And I mean, people always ask me, what was your process like before you quit your job? It was like, I mean, I knew where I was. If I did this another 34 years, I wasn't going to be happy. Mm-hmm. I didn't know entrepreneurship was going to work, but I knew for a fact where I was, it wasn't going to make me happy. So I was like, there's a chance here and there's no chance here. So at some point, you got to start trying to work your way out of it.
Why not take the risk?
Yeah. And so that was it. Like, I was just one of those kids who wanted to do something. I always dream big. I always want to make big money. I always want to own my own thing. And, we started part-time, and it was for fun. It was kind of a hustle. It was something we did for family and friends, but people loved it. And it just started compounding, so we decided to build it.
Over time.
Yeah, man. Yeah.
Erika, I know you and Chris, so y'all got married, you said
2020.
2020.
Mm-hmm.
So how'd y'all meet? And kind of your intro to it, Erika.
Oh, yes. Because he brought me into this whole entrepreneurship world. I didn't start, like, you know how sometimes people they say, when I grow up, I want to be my own boss. I want to be an entrepreneur. That was not me. Like, I grew up, like, wanting to get a job, like, go to school, get a job, climb the corporate ladder, make six figures. Like, that was what I was expected to do. That's what I thought I was going to do. And I did that by, like, 24 years old. Mm-hmm. Literally, when I was in high school, I wanted to be a teacher because I really like helping.
The opposite of him.
Right. Well, he wants to be a teacher. He just wanted to make money, so he knew it wasn't feasible.
Yeah.
And that was me too. So we kind of have the same story. He told his mom he wanted to be rich, and I just knew I wanted to be independent because coming from the Chicago area where I'm from, I saw a lot of people like I would see friends' older siblings that like go off to try to do something and then end up back home, and it was like a recurring thing, and I didn't want that for myself. So I'm like, okay, I want to be a teacher. I love helping people. I love mentoring. So let me research like what I should do for a living. And at the time I was in engineering classes for high school, and I learned that engineers make a little bit more money than teachers. No, a lot more money than teachers, okay? So I decided to go to engineering school so I could support myself, because I'm like, there's no way I'm about to be the story that goes off to school, drops out, and comes home and lives with my family. Or even if I graduate, I can't make ends meet with this degree, so I still have to rely on my parents. I'm like, no, I want to be independent, so I need to do something I can make money. I had no passion for engineering. I didn't even know about it. I actually didn't like it in high school. It was difficult. Like, it's not just like fun degree.
I don't know any engineer that actually likes engineering.
No, you just do it because you get paid. I got out. My first job was like $68,000 a year. Everybody else in my friends group was making like 40. I'm like, okay, cool. I'm doing okay. But I just couldn't do engineering anymore. I literally, like, it was a short amount of time that I could do engineering. And then I decided to go into sales. I saw, like, down the hall, like, me and my engineer cubicle where I'm falling asleep at my desk. Everyone's weird. No one wants to talk. They don't make eye contact. I'm like, this is so boring. And I saw down the hall, those salespeople, they would be coming in, 10 a.m., having fun. They go to lunch for 3 hours. They go to the golf course at 5:30. I'm like, what is happening over there? They're having a blast. So I'm like, sign me up for that team. And I moved. I literally quit engineering, and I went to technical sales, and I fell in love. I was like, oh, this is where I need to be. I can talk to people. I can help, because now I'm a teacher again. Sales is just teaching. People are like, I don't like sales. I'm not a salesperson. Do you like to help? Do you like to educate people? You're a salesperson. You could sell. So I got into sales, and worked my way up the corporate ladder. Started making six figures, 24 years old, 25 years old. And then I met Chris, and this crazy guy is the one that exposed me to this entrepreneurship world. And it was very uncomfortable. Like, at the time, he had many business ventures. He was doing consulting for marketing for people. He had an apparel company. He started doing insurance. And I'm just like, you have a decent job. Like, why are you spending time in the nights and weekends building businesses? That was so weird to me. But like, he kept rubbing off on me, because I obviously was attracted to it, and like the vision and the mindset, but it was foreign. I had never seen anybody run a business, my family and my upbringing. But I saw that he wanted to do insurance. Like, he really was passionate about it. So I wanted to help him. So that's when I decided to get licensed, just to like be his secretary, make phone calls for him, whatever I needed to do. And then it just evolved. Like, we got a mentor who was like, hey, I know couples don't really work together. This is kind of weird, but if you guys want to work together as a couple and build your insurance agency, we'll teach you how to do it. And I'm like, you're right. It's very weird. Couples don't do like professionally, they don't do things together. But we were open to it, and it was the best decision that we could have made. Like, I can't imagine a life like not building something side by side, like having to go to two different jobs, like for the majority of our lives, and then coming back to like eat dinner and go to sleep. I can't imagine. I can't subscribe to that lifestyle anymore. Like, I can't even imagine it. So it was a really good idea. Yeah,
it's crazy the flip that you go from not understanding the business part to I can't
part of it.
Like, I don't understand the opposite now. I'm like, ooh, you don't like, yeah, oh. Okay.
So let me ask you this, Erica and Chris. Like, you guys, whenever you decided to start going into business together, how long were y'all together? Like, was this like a new relationship?
We weren't even together.
Yeah.
We hadn't even started dating. We're just friends.
Yeah, it was kind of weird. Because I was in Atlanta and she was in Houston. And this is 2018. I got licensed. And she was just a friend, supportive. And she was like, okay, I'll help you. Because she had done some marketing stuff, too, with some of her friends and their businesses. Mm-hmm. So if you guys follow Erika, you'll see she loves marketing. It's just who she is. It's how she is. And so it was more like, hey, let me just help you, get this thing off the ground, because I know you want to help people. And I told her I needed another licensed agent. That's basically how it happened. I said, because the company we were with, it was structured off your agents that you had a license. Mm-hmm. And so I said, hey, I'm going to need you to do me a favor. You need to take this test and pass it and get licensed so I can get promoted. Mm-hmm. And so like 5-6 months down the road, she said, I'll do it. And she got licensed. And it was a sweet blend. It's not something that we planned. It's just that she said, this is kind of cool. Like, I like what you're doing. I see that you're making a little bit of money. And I think I could add a little pizzazz to it for you.
Yeah, I think we started dating like a month or two into like when I actually got licensed. because like obviously before you start officially getting in a relationship, dating somebody, you're in that talking phase. So like we were in the talking phase when I decided to get licensed, and then like a couple months later we started to date, and then we started building the business together but separate, because like he was in Georgia, I was in Texas, so it's a very weird dynamic. We were in a company when we first started. We worked with a different company, and the way it was structured, we were kind of competing against each other, honestly. We weren't really building together for a couple years, so that was weird. But then we got married in 2020 and he moved to Texas, so we actually started building our business together in 2020. So it's really only been 3 years.
It's 2024.
Oh, well, yeah, going on 4 years that we've been building it together.
So, question, I know you just said y'all both were like in 2 different areas. So whenever you get licensed, are you able to sell throughout the whole United States, or do you know, how does that work?
So it's very simple. You get licensed in the state that you live in, where you reside, but you can get non-resident licenses throughout all 50 states.
Okay.
So like if you're good at Zoom or technology, I mean, you can be everywhere. So our industry, and that's honestly part of our story too, how we came up, is because in 2018 when we started, we both knew that social media was going to be the way to go. But then traditionally it was door to door. You walk up to people.
And social media was just like
mailers,
2018.
Right? Oh,
Barely
mailers.
Yeah, it was like just starting to get a lot of
that part.
So one of the guys we work with now, he was doing it 15 years ago. He would send out mailers to all over the state.
And then fly to
And
that
call,
whatever state,
and then
he
fly
would
to the
knock
state
on their
and spend a
doors.
week there.
Like that's how
Really?
the insurance industry traditionally is.
Yeah.
Wow. So whenever you get the non-resident licenses, do you have to take tests to do that, or you just like pay a fee and just be like,
You just pay
I
the
want to
fee.
be licensed?
That's the beautiful thing
Pay a
about it. You
fee,
pass the test
instant
one time.
approval.
And then, within 24, 48 hours, you license in multiple states.
So easy.
So,
Yeah.
I mean, to get all 50 licensed, you're probably looking at $5-6 grand. And I don't recommend doing it right away.
Just
But
as
if
you
you-
get the client.
as you
but
get as you build a business case
you'll
for
need
it. Yeah.
It'll pay for itself. So it's easy. And then you just do one by one whenever you need it. Because like I said, they'll give you the license in like a day or two. So if you got a client now, just tell them, hey, it's going to take like 2 days for me to get my license there. And that's all you got to do.
So did your mentor understand whenever you were telling him, "Oh, I'm on social media"? Like,
Absolutely.
because I can see you guys being
No.
like the new kids on the block.
Yeah.
And it's like,
Yeah.
I don't
We
understand
shaking
how am I
stuff
going to
up.
sell insurance this way?
Yeah. So
no.
that
To
was-
this day, no.
Yeah, that was a challenge that we had to overcome because we were doing it and we were having pretty good success. And they could not understand it because they said insurance is supposed to be sold kneecap to kneecap.
Yeah, somebody kitchen
eyeball
table.
to eyeball, kitchen table.
That's how we started, but it wasn't working
that's
for
not
us.
where things are trending to.
What?
Things are trending to
No, it's
automation.
not.
Things are trending to people filling out forms
And yes, that's it.
can
I
call
want as
content
little
first.
interaction with you as possible.
Yeah.
I kind of want to ask you guys that. What does that look like, right? Y'all start to build this business. You in Atlanta, she's in Houston. What does that look like? Y'all not going door to door, so how do you sell from the internet?
So
We went door to door for a little bit.
we tried it.
We tried it.
Because that was the culture. And so I was in the office.
that's
in
what the
Atlanta.
training taught y'all to do.
Yeah.
I was in the office in Atlanta and she was in the office in Houston. So that's why and they were like competing teams. So it was kind of like we sharing secrets internally, but we still competing against each other. So we wasn't even building it together. And I don't know, we did buck the system. We just said, you know what, I'm taking what you're teaching me and I'm trying to figure out how to apply it virtually, electronically.
Yeah, because we would be driving. Like, we would
Yeah.
be sent out to the field, like, literally, kind of like how y'all used to do it.
Yeah.
We would be sent out to the field, like, hey, there's this person that is interested in life insurance, like, and we would drive an hour across town in Houston traffic just for them to be like, oh, I'm at my
Stuck at
baby's recital. I come back tomorrow. Come back
You
tomorrow.
could have told me that before I
Wait
got
a
in the car.
second. Come back tomorrow. I just drove 90 minutes. It's traffic. I haven't eaten.
And I'm frustrated because I almost got hit 5
what?
times.
And then
And-
we were working full time then too. So
And-
it's
That's
like
what I was
And I had a
asking.
full-time
Y'all
job.
was still
It's
working
like
y'all
after
jobs,
then
right?
you go like from 6 to 10, you like, okay, I'm getting in my car, getting in rush hour traffic, and you mean to tell me you still stuck at work or you at a
Oh,
basketball
no.
game? Like, nah,
So,
I ain't doing
it
that.
didn't take very long of that before I was like, this is absolutely not going to work. We need to figure something out. So we
'Cause,
started learning
you really
Zoom.
like thinking. I'm just thinking about it. You get off of work and then you driving to go to a sales call.
And they don't
they don't show
or
up.
it doesn't close.
Now-
and
now
now you're
that-
mad at the client.
I drove 90 minutes. Now I'm not
it's not
eating
the
dinner
client's
till
fault.
9 o'clock
Correct.
tonight.
Right.
Now,
Yes.
like I still got to work tomorrow. So I could definitely see how
Nightmare.
that door to door would be out. But to the flip side, how the internet would help y'all in that.
Oh my
because
gosh.
working a 9 to 5, it's a lot less effort to take out a phone and bust out some content, and not
Correct.
effort like in terms of it's not hard. It's just I'm not physically having to go somewhere and take up this time.
Correct.
I can batch record 6 pieces of content in an hour.
Yep.
If I plan correctly.
Well, see, what's crazy about us too, we just started doing videos last year. So
Oh, yeah.
our posts were just all static words.
Really?
Oh,
Yeah, so
we
it
just
wasn't
started
even a lot
videos
of
last year,
strategy.
David.
Yeah.
So yeah, it was just,
We never
It was
even
just,
did
can you make a
videos.
post while you at work?
We
It was
would
like,
send
yeah, all day.
direct messages.
DMs, posts, Facebook groups.
We made our first 6 figures in our first 18 months in business on a part-time basis when we were doing insurance as a side hustle. And the way that we got all our clients was sending direct messages every day. We send like 50 to 100 a day. We had our little script and, hey, this is us. Are you interested in talking about this? And we would be consistent with it. We made 6 figures like that. We didn't have any marketing, nothing. So once we started incorporating the marketing last year, that's when like we blew past 7 figures so fast.
So like what you were saying, Chris, the type of post I was putting out was just stuff like
Words.
like, hey, the insurance is important. DM me if you need insurance.
Yes.
And like the people that would DM y'all would then message them and y'all
We
have
would be
have
DMing
conversation.
them first
And
too.
then
you would do cold outreach as
100
well.
Oh, yeah.
a day.
To this day still.
For years.
To this day.
Yeah, that's where the majority of our
To
clients
this
come
day.
from. Yes, people sleep in the DMs. Like they're sleep on the DMs. Like
Money in the DMs.
There's so many dollars in the DMs. It's ridiculous. We literally had no marketing efforts. No one knew who we were. We never paid for an ad. We never bought a lead in our life. And we made $100,000. That's $8,000 a month as a little side hustle, part-time, just by sending people messages.
So okay, I gotta ask this, right? Because like cold outreach to people that don't really know you, you trying to sell them policies.
I had the same
What
question.
objections do you have to overcome with these people? Because
Yeah.
like if I don't know you, you just hit me up talking about life insurance. Like I'm gonna look
Already in
who
today's
is-
society, scam.
Yeah.
Right.
How do you get them to trust you, and how do you get them to close?
In the beginning, I mean, you just get left on red.
A lot of times you get
So you kind of
negative
find this
no's.
formula.
Yeah, because
Oh, yeah.
we weren't making videos, we didn't have any content, we
had
had
no
no history,
credibility.
no credibility. So
That's true.
so people
So they go to your
literally
page
just like
and they're like,
yeah,
dismiss
they
it.
clicking on they like
They dismiss it completely. So you don't
What?
get as many negative messages as you think because they don't even pay attention to it.
yeah.
But every once in a while, you find somebody who say, "Oh, I kind of been thinking about it." It's like, well, hey, and this is where the Zoom came in because we started meeting people in different states. Hey, well, no pressure, but I can show you how it works. It only takes like 10, 15 minutes. We can hop on Zoom. So it's not a commitment for them. When you tell them it's only a couple minutes, you don't have to drive anything, where you don't have to pay anything. Some people say, yeah, I'm open to it. And it was a bad strategy now I look back, but if you do
It's not a bad strategy if it worked, brother.
if you do enough of anything, it'll work.
It's sales though. Like at the end of the day, like
It's still
regardless of if you door to door or if you're doing it online, sales is sales.
It's still numbers.
It's still a numbers game.
Yeah.
Like you
Right.
work the enterprise, you know the numbers.
numbers.
It's numbers at the end of the day. It's like on average, you talk to 100 people, 10 people might show interest. Of them 10 people, 2 people might actually buy something.
Yeah.
But it's about, like y'all guys said, getting the consistent.
Yeah, and I will say this is a thing that kind of helped, and this is a cheat code for new entrepreneurs. You can borrow other people's audience and confidence and credibility. So we started posting in Facebook groups. We had decent Facebook pages, like 3,000-4,000. So, I mean, people knew us. We were credible. I will say that because I worked in insurance. She was working for an electrical company, so people trusted us. But sometimes you guys don't realize when you post in a Facebook group with 20,000 people, they don't know that you're not the moderator.
Yeah.
They assume
Yeah.
you might be.
Yeah,
the
especially if
posting.
you're posting consistently.
Consistently.
Like, they
yeah.
show
That
up a
was
lot.
our key. So we
we
started
posted in those groups every day,
every
like 10
day.
times.
So it was almost like people thought it was our group
thought
and
it
this
was
was
our
our
group.
audience.
Y'all got kicked out for that?
No, we would go to the groups that let you
Yeah.
promote.
Okay.
Yeah, they got,
'Cause
you
I know
know,
some
some
groups
groups
got
they
kicked out
have
of
the
groups
rules
that
like
are
you
like-
can post
Yeah.
once a day or
Yeah.
like
I started getting kicked out of groups, and I'm like, why are you kicking me out? And then I realized, oh, there's a thing that like some groups don't let you promote. I did get kicked out of a lot.
Yeah, but we started building our traction like that because people started seeing the consistency. And then, obviously, I mean, you got to have some proof. We was in the company. We started winning some awards, and people started seeing that we were traveling a little bit more. They're like, okay.
Then we started marketing. They're like,
started
now
marketing.
you guys can know we're somebody.
Then you change your content. You become more educational because if you post in the groups, it ain't always who want to buy. It's like, hey, did you know? You
Yeah,
can
just
save money
provide
tax free.
value.
Did you know if you get sick, if you had cancer, you can use your life, that type of
Yeah,
stuff, and people
just-
see it consistently.
and it doesn't always have to be a video of you explaining
No.
it. Like you said, just that information.
It wasn't
in a
for
way
us.
that people can just receive it, and then they reach out. That's dope. So, like, you guys both mentioned, too, that you were both working the 9 to 5, and you did this in the first 18 months part-time. So, was it after those 18 months that y'all made the 6 figures, that's when y'all decided to go full-time in the business?
It was weird. We got
whenever
married.
you moved?
Yeah, we got married January 2020. So I quit my job, moved to Houston, and I went full-time, and she kept her job.
Gotcha.
She was making more money than me, so.
My job was more valuable.
That sounds like a good strategy for teamwork.
It was making more okay.
And she
You could go
worked-
first.
Yeah, and she worked from home. She had a lot of
Yeah,
flexibility.
I had a
Oh,
cushion
so
job. It was
you
just
was
like
literally still working
I
for
was-
real.
Yeah,
She was
yeah.
double dipping, what we say. Like,
Yeah.
she had a company car, so
Oh,
we were
man.
paying for
We
car
would've
notes.
still had to work
gas.
like-
I ain't gonna-
So it's like,
I'll tell you the story.
you hold on to that for a while. And so, like, the first 5 or 6 months when I moved here, we started cooking because it was 2020. So we started doing Zoom in 2018.
Yeah, and
We were
that's
ready.
when Zoom became
Perfected,
like
y'all
the
had it
standard.
we was
already.
ahead.
We
Like,
were already ready when everybody,
Everybody
when
was
Zoom
inside.
shut
And
down
y'all
the
was on
insurance
social media
we
industry.
already.
started cooking. That's
We
what
were
it was.
in an environment where everybody's like, no, you have to drive to the client's house, kneecap to kneecap for years, and then bam,
Got taken.
lockdown. You can't drive. You can't even go 6 feet in with someone. So now what do we do?
They ain't about to let this
Chris
stranger
and
in their house
Erica.
now.
Right. Hey, can you tell us about the Zoom thing you guys have been doing? Oh, okay. Sure we can. So that was our time to shine.
Yeah.
We're like, we can show you for sure. And our business took off because we didn't have to learn Zoom. We didn't have to adapt. We didn't have to pivot. We'd been selling on Zoom for years. This was just our moment and we skyrocketed.
It's a perfect storm. It was
We
the
made
moment
6 figures in like 4 months in
First.
COVID. And that's when we left the job. We started making $30,000-$40,000 a month part-time. I'm like, I was 28 years old at the time. I was like, oh yeah, we're about to do this.
Yeah, it was a perfect storm. Like, it was a perfect time. And we was in a company with 20,000 agents, and we were training the company because everybody knew that we had been doing this. And it's funny that January, like, I moved here, we made like $3,000 that month, and I was like, okay, maybe it was a good move. We'll see. Like, I didn't move here for that, but it is what it is. February, we made like $2,500. I'm like, okay, we're going down, but we ramping up. In March, we made like $1,700. I'm like second guessing my whole move.
Yeah.
I'm
Because
like,
we were
Were
putting
you
in so
doing
much
better in
work.
Atlanta?
than that.
Yeah.
But around that's when COVID started hitting. And we started working together too, so we had to figure that dynamic out.
Yeah, how do we work together?
Yeah, that
Like,
April.
together.
Yeah, that April 2020, we made $10,000. That's the first time we made, was that 5 figures in a month? 5 figures. We made 11 grand and like 12 grand that May, like 15 that June, and I turned 30 that year. So I was like, man, 15 grand in a month, like
Unheard of.
crazy. And then after that July, we made like 40 something grand. Next month we made 30 grand. And it's just like, shoot, what do we literally was like, what do we get ourselves into?
Can I ask you this, Chris? Like, whenever you're saying this, like, you guys, the money's going up. I just kind of want to get an idea of how you're making
went
money
down
in
first,
insurance. Yeah, it went
then it
down,
went up.
then it went up. Correct. So, like, you guys are building a book of business, right? You're getting clients. Is it like certain types of clients? How is it just like each client's paying you the same amount, or is it like you're getting larger clients? How did that work out for you guys?
So the way the commission it works it just depends on what the client is paying every month. So we get a percentage of it. If they're paying $100 a month, that's $1,200 a year. We may get 60-70% of $1,200
for the year.
Yeah.
Gotcha.
So the way we market to clients, we don't even say like, "Hey, you gotta spend $500." It's just like, "Hey, what's within your budget?" And we can see what makes sense for you.
Like,
And that's how we did it. And that's why it was so easy for people because they didn't feel pressured or, you see
You
it
weren't
online.
trying to force them into a certain
No,
product.
it's always like, what's comfortable for you?
and our angle has always been volume. We help a lot of people, more so like now where we are now, like we have a lot of high net worth clients, but when we were first starting off, our clients would only pay like $30 a month, $50 a month. We never had clients that would pay $100 a month.
So you had to
now
go
we have
for
clients that
volume.
pay $10,000, $20,000 a month. But back then it wasn't like that. We had to focus on volume, on reach. That's why we started building our social media, because people had to know who we were, because we're not the people that we're going to get 2 or 3 clients that made our whole income for the month. No, we need like 100 clients this month. So we would just help everybody. We would be marketing, sending out direct messages. So like, just to give you an example of like how insurance commission works, usually you get paid off the annual premium. So let's say a client pays $50 a month, 50 times 12 months in a year gives you $600 for the year. If you're at a 50% contract as an agent, you make $300. So you spend 20 minutes on a phone call helping a client structure a policy. They pay $50, you make $300. It's like very simple.
And you get your $300 up front?
Yeah, you get up front. So it's like 20 minutes of work, make $300. So like, we're like, oh, wow. Because people think that you have to be such a great salesperson, get these high clients. It's like, no, anybody can pay $30 for insurance. Anybody can pay $50 for insurance. And if you're going to make $300 every single time somebody puts $50 in, can you get 10 clients that could pay $50 a month? That's $3,000 a month. For 10 clients. You're not selling 5,000 clients.
I'm not going to lie. This is like crazy. The simplest way I've ever heard it being broken down.
So this is so for you guys, that's how we did it.
This was the math. Like we always do the math. That's how we're able to hit our income goals. Because I'm like, what's the math? Okay, let's reverse engineer it. Oh, we only need 72 clients of this amount. Okay, that's 20 a week. Okay, let's do it. 5 a day. Got it.
That was it.
Like that's how my mind works.
People. We schedule these amount of appointments.
Appointments. Yeah, fall off. Yes.
Big or small, we take them all. That was it.
That was the campaign.
I like that. Big or small, we take them all.
$5. Okay, let's go.
Let's go.
And what happens is too, it's a compounding effect because you're meeting people. Yeah. So like
getting referrals.
You get referrals, and then they say, "Oh, you should talk to my mom, and you should talk to my uncle."
Especially like if you're doing that part because both of you had an educational background. You're doing your part in actually educating people.
Oh yeah.
Because like you said, you don't have to be a great salesperson, but if you know your information and you're able to articulate that to somebody in a way that they can understand it, it make the job easy.
Yeah.
Our clients always learn.
Is that how you guys went from 10,000 to 15,000? It was from you guys building on that momentum and getting the referrals?
Yeah. Oh, yeah, the referrals. A lot of our clients, this is so weird, a lot of our clients end up asking us how to get licensed, and they join our team. Like, they're like, I really like the way that you educated us. This was a seamless process. It didn't seem difficult. I could do this part-time, working from home. Are you accepting applicants? We're like, yeah, come on, I'll show you how. So a lot of our clients end up coming on board, and then they open a whole new market of people I would have never known. Now they're going to go protect their friends, their family, their social media followers. I'm just going to assist. And as a broker, you override, you get passive income for setting up the software system support for agents. So it's like, there's so many ways to make money in the business.
And part of my story too that I didn't tell is that because I was already in insurance from a professional standpoint, everybody used to always come to me about finance, saving, investing, life insurance. So some of the reason why I wanted to get a life insurance license is because it made sense, but I had like 10 or 15 cousins who were looking for life insurance. And I was like, I'm referring it. Maybe I'll stick with this thing full time or not, but why am I giving it to other people when I can just pay $200 or $300 to get licensed? And so that's what I did. Like, I got licensed. I threw a party back home. We had drinks, food, invited everybody. And it was like 12, 15 people that got policies within the next 2 or 3 months. So it wasn't even meant to be a business. Opening. It was just like, hey, nobody's going to care for you more than I am. So how about I get licensed? And I'm interested in this stuff too. So it was fun for me. But that was me making an extra $3, $4, $5 grand in my first 4 or 5 months because it just made sense to take care of your people. And then it just continues to compound and grow. And not to mention COVID. We had everybody's attention because it was social media. Like, people couldn't go outside.
Yeah. Social media became...
That's when we started revving up.
Really took off during that 2020 year. Yeah.
Especially, like, the webinar and all of that type of content.
Because you couldn't do it in person no more. I remember going into that. We actually were going to do an event in Houston. We had it planned for the day that the shutdown actually started. Like, I think the shutdown was like March 15th or something like that. Something like that.
Our event was like March 17th or something.
It was like, we had this like co-working space. We was like, planned it. It was like, oh yeah, we're going to make it happen. And we started seeing the news and it was like, nah, man, we should be good. We probably
still got our reservation. I know they never gave us our deposit money back.
We might as well charge that one to the game.
Literally, that was the cost of experience.
But the shutdown was such a drastic change in like just consumer behavior and people behavior. We went from in person to online. And now I think we're still some residues of that. Like, people are starting to get more into the in person now. Yeah. But we're much more accustomed to, as a consumer base, to buying and interacting with online interfaces. So, like, you guys, I know you mentioned that you came into it with that. Is that something now that, like, is it still the key part of y'all business, social media, or y'all still kind of shifting back into some of the traditional marketing things?
No, to the point where we decided to leave that company that we started with back in 2018. We left that company in January 2023 because they were going back. They were backsliding. They were going back to how everything has always been done when the future is progressing. And the mindset, we couldn't conform to that mindset anymore. So we left the company to start our own company. And it's a virtual agency.
Yeah.
Yes, it's a virtual agency. Yeah, 100% based on interacting with clients via phone call, via Zoom. We inundate our agents that work with us, like teaching them everything about social media. Like we have a marketing Monday night call every Monday night where we're constantly just teaching them, putting them on game. This is how you market yourself. This is how you build your brand. We have a whole Canva toolbox of hundreds of free posts that are pre-made about insurance, retirement, becoming an agent, that they could just insert their own picture, their name, and start posting it. We have 300 pre-made posts about life insurance with Forbes articles, retirement, everything that you would want to know. So they could just copy, paste, put on Facebook. Like we went all in the virtual world to provide that platform that we never had for the next generation of agents. So our agents that are coming in now, they're coming in, plugging into all these resources, and they're just going to the top so fast. Like I just told you, it took us 18 months before we started making 5-figure months. We had a girl that joined our team this summer, and in her first month with us, she made $9,800, $15,000, like from the beginning, because like we have this system that's just cranking, but it's all based on virtual ease, fast. I could only meet 1 or 2 clients a day if I have to drive around town. We probably meet with 20 clients a day right now, I would say.
Between the two of
bam, bam, yeah. Like,
team.
Yes, like literally.
Team, like,
with the team, we probably
40,
meet with like 100 clients a day.
Dang.
Yeah.
Yeah, I mean, we still do like, so culture is important for us. So, I mean, we still do quarterly masterminds, think tanks. We fly around. Because, I mean, you can't, breaking bread and really getting to meet people and getting in the trenches, like, that's how you build people's trust.
So our masterminds are so special. We're having one next weekend. We've got about 150 agents flying in from all over the country.
Where's this going to be at?
In Houston.
In Houston? Can I pull up?
Please, come through. What?
Hey, I'm for real.
You want to be in that mastermind energy. You like, hey, I'm trying to see what that.
Y'all silly. You're like, who's that girl?
Yeah, and we do stuff like that, but we want people to know that 90% of the business, like 100% of the business can be done online.
Yeah.
Like you don't have to do that to be successful.
It's just a good team building.
Yeah, you
From
want to check
a culture
pulse.
standpoint.
Yeah, too.
Yeah, because it is important. We like to build those relationships with our team.
And we're talking to people like 8 in the morning.
I don't need to see you 3 or 4 times a week, but I do like to see you quarterly.
Yeah, but I'm calling somebody 8 in the morning, 9 at night. We having crucial conversations. Like it's nice to meet the person and actually feel them and see it. Because you can check people's temperature. You know if they got the right idea, right vibe, or if they for you or not. And so we want to open the door so we can all feel that and see
trust equals speed. So the more trust you have in the organization, the faster, the bigger you're able to grow. So like more so than us wanting to meet our agents and have fun and put on a world-class event for them, like it's important for them to interview us. Like, are y'all the real deal? Are you legit? Like it's important because that builds trust, and trust equals speed. Let's go fast. Let's go to the top.
Yeah, people see the social media following, they don't think we eat chicken wings. Like
they think like, I don't know, like we're going to the taco truck on Friday night, like as a team. Like we're not going to the steakhouse. Like for real.
I'm a person
We're
still,
real.
bro. Yeah.
We have fun.
But I can't do that on the Zoom, so like they don't know that. Like,
but that's business being business, and you being a person. That's two different things. Yeah.
But we forget that. So we have to remind ourselves that too, because like we always button up and professional on camera. But like,
I kind of want to ask you, what you got?
I kind of wanted to ask, because I've been trying to get this out about the agency. So like you guys left the other agency in January, right? What does that look like? Y'all were in their system. Y'all had everything that y'all needed. What does that look like starting your own agency, right? Do you have to become independent agent? What does that process look like?
That process was messy.
Why was that?
I'll be honest. So there's a lot that you don't know, especially in the insurance industry. When you get brought in by a company and you're there for a little while, like between the trust and just your experience, you feel some level of like obligation to them, and there's just a lot of things, a lot of dynamics that go on. So people end up staying somewhere that may or may not be the best fit for them, just because what else is out there? Because there's a lot of loyalty, and there's fear of the unknown. Like, you don't know, to your question, how does it work? You don't know how it's going to work. We didn't know how it was going to work. We had an idea of how it was going to work, and that blew up in our face completely. And we just had to roll with the punches and figure it out. Like, our leadership had to 10x grow in 2023 when we kind of got the leadership carpet taken up from under us, because when we were under a company, we had everything in place. Everybody was there. If there was a fire, somebody else could put it out for us. So our first couple months on our own was putting systems in place, was realizing how does the new licensing system supposed to work, like streamlining things on our own. So it probably took us, it was a solid quarter. We didn't perform the first quarter of the year. The entire 2023, we basically didn't have any production because we weren't signed up. It was a mess. And then even after that, it took 3 or 4 months to streamline what we were, like, to get to full capacity.
First you had to get it done, and then you had to refine it to make sure it works.
Because you got to go through regulations and like the state insurance boards is like
you're contracted with these companies, but we're contracted through another company.
Yeah.
So you have to like terminate those relationships.
And we have to reform the relationships directly with the carriers.
So, and it's like the different insurance products,
and this is like federally regulated, so it's like it's just not an overnight process.
So with all of the book of business that you guys had with that other company, did y'all lose that, is what you're saying?
Yeah.
Yeah.
Basically.
So it just depends on what company you work with.
Yeah, it depends. That's
it's not that way with everybody, but where we were,
Where we were, yeah. Damn. So it's something that you don't know, though. Because we had thousands of clients over there. So it's just research that you have to do. Like, do I want to be working as an independent agent, as a captive agent? Do I want to be a W-2 agent, a 1099 agent?
You're giving me a lot of agents. I need to know what these agent types mean. So you said you could be an independent agent, which obviously, if you can do something, independent. What is a captive agent? That's like captive, like
product. Like, I sell this only.
State Farm.
State Farm.
Allstate. You can't do
Geico.
So what's the difference between an independent and a 1099 agent then? Because they kind of sound similar.
Well, independent 1099 is the same.
Okay.
And you could do your own thing. You're independent. You could jump around. You could sell for who you want to. Versus W-2, like if you have a job, you're not. Sometimes you get a little bit.
You might be working like for like Northwestern Mutual, or like one of the biggest.
Yeah. And for me, like I think companies get over on agents that hire them as a W-2, because like you might get like a $40,000 salary or $50,000 salary to sell insurance.
Produce a lot more.
But what? I just told you the math of $300 in 20 minutes. So it's like the math does not math, but that's a different story. But certain companies, if you're not independent, they will keep your book of business. Like if you work for a multi-level marketing or MLM company or something, they'll keep your book of business when you leave. Yeah. So that was like something we had to experience, but it was a blessing. Like what we've been able to do on our own, even with the turmoil, even how crazy 2023 was, to put it into perspective, our best year producing at the other company, I think we might have done like $800,000 in a year. I think that was our best year.
And y'all had to split that with them, right?
Yeah.
Okay.
But and that was after 4 or 5 years working with them. So after 4 or 5 years working with you guys, our best year is $800,000. Last year, our first year independent on our own, with only 9 months working. I told you we didn't work the first quarter. And then the next half of the year was crazy. So this was not normal. It was just a bunch of crap. We went from $800,000 to $1.43 million. Yeah. With all that crap. So like this year, we're going to cross $3-4 million.
And that's the amount of that y'all produce, or the
that's
policies
the
that y'all
revenue.
wrote?
Yeah. Okay. It's the revenue from the policies that we produce.
From the team too.
So yeah. Mm-hmm.
Gotcha.
So as an organization.
I got you. And whenever you said, y'all had the blow up, is it the part where y'all didn't understand what was going on in the beginning of 2023, getting all of the systems and everything together?
Yeah.
It's a lot that you don't know. So sometimes people ask, why don't everybody be independent? Because if you go through different companies like a MLM company, they do shelter you from a lot of stuff.
You don't know what's
you really don't know. Which, I mean, if I could do it all over again, I would do it that way.
Oh, yeah.
Which way?
Like as an independent company, right, you got to go get bonded, things like that, right?
You might. Or a lot of times if you don't have a history of doing this, it's hard to get insurance companies to back you.
Like, okay, I got you. Like actually getting
You don't have
the
credibility.
companies to give
They're
you
like,
the
who are
products
you?
to sell.
Yeah.
Or they
They're
may
like,
give
who
you a
are you?
limited product.
Yeah.
Or you usually don't get some of the best companies because you don't have a track record.
Yeah.
You gotta show. You have to be able to show them that you've performed in the industry before you can.
Yeah.
Go
So
off
when
and
you
branch
go
off
under
in that.
somebody's umbrella, you are pretty much like grandfathered in by
Using their
the company.
likeness.
Yeah. So we got a lot of training. We got a lot of mentorship. We got a chance to learn the business from people who are actually doing it. And it was still 1099, but you still leave some crumbs on the table because you are using their systems.
Gotcha.
But that's so much we didn't know because that's all we ever have been a part of. And
Yeah,
then now,
I would have
like,
done it the same way.
Oh, yeah,
Looking
for
back,
sure.
I wouldn't suggest people like just going from no experience to going to be an independent agent because you're not going to get support. Like, yeah, the MLM is going to keep their cut of your commissions and whatever. But in my experience, it was worth it in exchange
yeah.
for the experience that we were able to shadow successful people, learn from them. They had stuff in place that I could kind of see, like, this is how it's supposed to work. So even though our philosophies didn't align, like, the experience was still valuable. I don't write it off. Because I would have been lost, like if we were just trying to do it independent from the beginning. Like
without
after
the structure first.
After 5 years of experience and making hundreds of thousands, probably over $1 million in this industry, now we barely were able to put our own company in place and be able to run it up. But like, you can't just do that.
Yeah,
That's important that you're saying, Erica, because like we talked about that with Jake when we were talking about the Private Small Business Society. A lot of times as business owners, especially post 2020, a lot of people saw on social media, go get an LLC, do this, and do this, and you'll be good. But you don't have the business acumen. You don't have the backing.
What are you going to
sell?
sell?
To just hop in business that way. Yeah, you can.
No.
It's easy to have a business structure. As our guy Saludo said, it's easy to have a paper LLC.
Yeah.
But you want a performing LLC.
I want some money.
And if you wanted to perform, you're going to have some skills. And Jake pointed out a very interesting stat that last time. It was like the businesses where people have the highest rates of success are people who have been in that industry for 5 to 10 years.
Of course.
Because they're not coming in green. They understand the industry in an intimate level. And a lot of times we think starting a business is always just, I'm going to just start this and everybody going to come. But you got to get that backing. And that's why like mentorship is so important.
Right.
Because you
Everything.
can kind of cut that learning curve down for people. But you still can't fake the experience. You got to go out and actually do the work to get it.
Yeah.
I mean, like, if you want a side hustle forever, which I'm not knocking it, but like we had got to a point where we didn't want it to be a hustle. We want to be legit and we want to have a real business. Then you need people in your corner who's done it. And even now we're independent, so we know insurance, but there's so many business things that we still don't know. So we get more. I mean, I guess we make more now, but we still talking about hiring a consultant.
Yeah.
So it
Like,
never
you still
ends.
need
Like you
that
still gonna get
mentorship.
some of the crumbs up, but you just get more for what you do. Like we still need other people to take a look at our business and say, hey, you're weak here, you're weak there. I'll implement a marketing officer and you need a technology officer. Because like I've never been here before. I don't know that. I'm thinking that might be 5 years down the road. He said, no, if you do this now, in the next 12 months, you're gonna 2X. And if there's people who've already done that job, pay them.
Yeah.
That's what mentorship is about. Like
So-
you can't be afraid about that.
Any type of business where somebody's taking a cut of your commissions or your money, like you have to see what is it in exchange for, because that valuable mentorship is so important. And you're not paying the mentor for their time with you, you're paying the mentor for that 5 years of experience. Because I couldn't have started the company in 2023 without that 5 years of experience. So if you want me to teach you how to start an insurance company and go to 6 figures, 7 figures in your first year or two, when it took me 5, that's what you pay for mentorship for. It's not for my hours worth of consultation. It's for my 5 years of experience that's going to allow you to take my 5 years and put it into 18 months for you.
Absolutely. And sometimes entrepreneurs too, like when y'all think about this stuff, don't be afraid to give up a piece of the pie. Like,
No.
because your pie is small.
Yeah,
You got like a moon
you
pie.
ain't even
like,
got a pie.
You know what I'm
You
saying?
ain't even got a pie.
So you got to move.
So the pie ain't even big. You worried about like, no, if I bring this person in, he's gonna give us a Chicago deep dish, large pizza,
Yeah.
and like my
So your
slice
slice
of this
is gonna be
But I
bigger
want
than your
this
whole
moon
business.
pie.
Yeah, my slice of this
moon pie.
is bigger
Instead
than
of
your
a
whole
this-
moon pie.
Come on. Now.
Like, for
And you
real.
don't think like that because it's precious to you. You don't want to leave money, but
Yeah.
like that's the next level of scaling. Is bringing in more people who can take it further, yeah, you give up some of the business, but
Yeah.
the business is bigger. I give you 10%, but you 10x the business. So it's like,
Yeah.
like,
It's a win-win. It's a
for
win-win.
everybody.
100%.
And people don't, I guess we forget that business can be a win-win. It should be.
Yeah.
Everybody should feel like they got a deal.
Yeah.
And I know this is about to be a segue. I hate when people feel like you got to mess over somebody to win in
To make
business.
money.
So, yeah.
One of our main principles, we say it we have training twice a week for our agents on Tuesday night, Saturday morning, and the way we start it is with our code of honor. And one of the founding principles is you can become wealthy without doing evil. Period.
I like that.
Twice a week, every week, our team hears
That's
that.
like a daily affirmation.
Yes.
People should say.
Yeah.
Because you can, because I've seen it in the past where, especially in the insurance industry, there's so much money. It's literally the number one industry to become a millionaire in, that's multi-trillion-dollar industry. So when people get a taste of that, you start doing shady things, you go against your morals and principles and values. And we've seen it. We've seen people doing that and questionable things. And we went the other direction. We went opposite. And we've had success. God's hand has still been on our business. And we've been able to grow so much without screwing people over, without being shady. So I'm like, I know you can become wealthy without doing evil. Maybe, I don't even want to say it might take longer. It may or may not. But even if it does, like, it's possible. And I'm willing to do it that way.
I like that.
It take longer. I mean,
Yeah.
it's shortcuts for sure, but we thinking about with long-term
Longevity.
greedy.
Yeah.
Yeah. It's like we still greedy. Like I'm just long-term greedy.
Yeah.
You know
Right,
what I'm
right.
saying?
I have a
wanna do
longer vision for my.
I want to do well over time, not in the short term.
And that's it. Most people want to get it right now. That's the only
And a
difference.
lot of time, whenever you sacrifice your morals and integrity for the short term bag, that short term bag only lasts like a short term.
Come fast.
Fast
Yeah,
as
yeah.
it came.
Now you back at square one, and you done compromised yourself. So now you gotta
Now you
look
look
at,
like
you
a
gotta
fool.
deal with that. You gotta internalize that. So I like that too. I think I might have to add that to the affirmation.
There
list.
you
I
go.
like that too. I am.
or it stays a hustle because the nature of our business is trust and
yeah.
relationships. So like if somebody feel like they got had, okay, you got that sale, but it's never gonna lead to anything else from that person because
Yeah,
they didn't.
because I ain't
feel
gonna
good about
lie. If I feel like you got over on me,
Yeah.
I may not always just be like the person that's gonna be like, man, F you all the time. But I never forgot.
it. Yeah,
Like, you know,
right,
it's
right.
like,
I'm the same.
If somebody bring up your name, don't fuck
tried
with them. I'm telling you.
bad business.
Literally
Exact-
bad
and your name is
business.
everything, like you said, in a business where it's trust and stuff like that. So now I want to ask just a general insurance question to you guys as agents: term or whole life?
Both. Either. Whatever one you're going to have enforced when you die.
If you gotta put a boom gun to your head, term or whole life policy, what do you think is better for somebody to buy in terms of building wealth?
You got to, it depends on your angle. Like we say both because we always tell people, because people ask, that's probably the most common question our clients ask us, right? We have a whole webinar. It's a 12-minute webinar that explains term, whole, and everything that goes into it so that they can understand and make a decision for themselves. But for us, I'm like, whatever policy you're going to have enforced when you die, whatever policies that's going to pay out. Like it's not either or. Like if you have a short life expectancy, which you can't predict that, or if you have like a house that you want to protect the mortgage while your kids are young, term, it's affordable. You'll get a big death benefit payout if you pass away prematurely. But if you're looking to use this like as your own bank, then term is impossible to do that. So, but there's pros and cons to being your own bank. So it's just like whatever you think is.
I mean, like she said, I mean,
Because we have both. We
situation-
own all
we
types of
both
life insurance. We have
actually
multiple.
term.
We have
I
so
do
many
a
life
whole
insurance policies. We have everything. We have term, ROP, whole,
lot.
IUL.
We think about, we think
We
about
have
leasing
all the
cars
policies
versus
on
buying.
ourselves.
So, and you know, that's a good question. Leasing cars versus buying. I've never been a person to lease. I'm a cash car type person.
Man, my next vehicle, I'm leasing.
I think
Okay,
about
so
it though, like
see,
it makes
difference
sense.
of
Like
opinion.
whenever you think about it, I'm a cash car type person because that's how I've been raised.
Yeah.
That's what I saw my whole life. But like leasing,
talk
whenever
about
you
that.
start doing like the use case on it, it's not a terrible idea. But at
If
the
that
end of the
thing
day,
break, it's not my problem.
yeah,
It's theirs.
you don't own it. Like you, whenever you look back on it, the money that you spent, you have no equity in.
Correct.
Right. And
Yeah,
if you
but-
if you are gonna buy that cash card in that situation, so you giving me situations now, I might tell you take that cash, wash it through a whole life policy first, and then go buy the car. So that's a little trick of the trade. So it just depends on what you want.
Yeah, I ain't like how you just. I wanted you to give him a situation because it's like It can't just be that
if
cut
you
and
tell
dry.
me a
Yeah.
situation, I'm like, oh, okay, I can see how you could make your money work for you in two places that way.
And
Get
I
your
think
cash
that-
card, but make it go through the policy first.
I think that makes y'all great life insurance agents, though, is because you can say, hey, I don't know if this product is going to be good for you in that situation. I feel like there's a lot of people, even I used to be a car salesman. I know we're talking about cars right now. Like they would push you, okay, we got a deal on this type of car. If you sell this many type of cars this month, you'll do a bonus or whatever. So people will try to push that car. But at the same time, I know this is a mother of four. She's the
Like,
only
this is not good
income
for you.
Yeah, like in this car note is going to push you out of this. I'm doing more harm to you than I am doing good.
Yeah.
Same thing for y'all. Like if I know that you can position yourself for wealth with a whole life policy versus me just telling you get a, whole, am I really doing you the best service?
Yeah, we say whichever one you're going to keep is the best one.
I want to say something about a brokerage as well as doing right by the client with the whole life before I forget. So whole life or permanent life insurance, cash value life insurance gets a bad rep sometimes, especially from certain agents, because the agent that sells the policy isn't doing right by the client. They're not trying to get wealthy without doing evil. And it's either knowingly or unknowingly. So you can't necessarily say it's their intention, but some of the agents know what they're doing. Some of them don't know what they're doing. But either way, if you don't have an agent that knows what they're doing and is going to do right by you, cash value life insurance can blow up in your face. We literally just this morning had a conversation with one of our agents, and Chris helped her to help her client. Her client was putting like $12,000 into the life insurance policy. So our agent's like, oh man, I'm going to have 12,000 times 12 and put my contract. It's like she's doing the math. She thinks she's going to get this fat payday, right? So she got her commission, and she called us this morning upset. She's like, hey, what's up? What's up with my commission? So we had to explain it to her. Hey, if you would have not structured the policy correctly, you would have gotten a fat paycheck. And that's what a lot of agents do, knowingly or unknowingly. Some of them do it maliciously, but some of them
they do it to make they bag, but not
some
the
of
people.
them. But some people, some agents are just green.
That's
They're
just how they got taught,
inexperienced.
right?
They don't know what they're doing, and they're selling something they shouldn't be because they don't have training. So whether they're doing it intentionally or unintentionally, the fact is you sold a client something that wasn't the best for them, but you got a fat paycheck. Chris obviously taught our agent how to sell it the right way. He properly structured the policy for the client. So the client's getting a bag. Like that client, his policy about to grow. He about to run it up. Like it's a dream come true for the client. It's an amazing cash value life insurance policies are amazing ways to build wealth if you get it properly structured. But it screws over the agent because the agent, she got a little baby commit. She didn't get what she thought she was going to get. So she's like, well, I didn't get as much. Yeah, that's why you hear cash value getting a bad, oh no, it's not good, because the client that experienced, like the client, they put all this money into an insurance policy and they have nothing to show for it.
Because
the agent.
The agent.
Yes.
So what does that look like? Because I know you're saying if they're doing it knowingly or unknowingly, what are they exactly doing? What is it that makes it either good or bad for that person?
Is it like a fee structure type situation?
It's so the way the IRS sets it up is like you can get a policy and they put limitations on how much money you can put into it
Legally, without having to pay taxes.
So this kid he's paying $12,000 a year. So if he wanted a whole life or IUL, he could have got like $2.5 million in life insurance. When you buy life insurance, there's a cost to having that death benefit. Like you have to pay for it.
And the insurance company pays you based off of that.
Correct. So like
so
the
how
typical
big is
agent,
the death benefit?
Yeah, a typical agent would have said, "Hey, let me give you the biggest policy out there," because they would have got paid more.
You could get $2 million for $12,000. Let's give you this.
It's going to take you longer to be able to access that cash
value and build up cash. So what I did, I gave him a death benefit of like $500,000, $600,000.
So much.
So the death benefit is low. So the costs are low. All the money is going to cash value.
I'm glad you bringing this up because I believe you spoke to me about you. We had talked about this before.
Yeah.
And whenever you're saying getting a cash value policy, that's the better route to go, right? Whenever you're getting a cash value policy, you don't want to have a high death benefit. You want to have a lower death benefit so that you can actually access the cash.
If that's what you're looking to do. If you want to be like your own bank and all that stuff, that's how you set it up.
That's how it has to be structured.
Some people say, hey, I want the insurance too because I got kids, I got a house. So like, I know I'm not getting cash right away, but 30 years down the road, okay, cool. But for the people who are trying to do that, it's not about getting a $3 million, $5 million policy. It's about what's the least amount of insurance I can get
As a
for the amount of
tax
money
shelter.
that I'm putting into it.
And but the agent doesn't get paid the same. How I explained it to you, it doesn't work like that.
Yeah,
It's
the agent
much
don't
less.
get paid. The agent don't get paid like
So you
they
do-
would off the
it-
$2 million policy.
You
Correct.
do
So-
get paid like that, but the amount, the annual
less
premium
because
is
it's
much
less.
The
less.
cost of the insurance.
Even though the client's paying, let's say, $1,000 a month, $12,000 a year, you don't get paid off $12,000 a year. You might only get paid off $2,000 a year.
Gotcha. Because the client is overfunding that policy.
Correct.
So like they were putting 12,000 in.
But their premium was only like $5 or something like that.
Yeah, it was like
Yeah,
it was like
correct.
$2,000 for the year.
$2,000 for the premium, but
For the
they're
year.
putting 12,000. So
So
they're
you're
putting an
getting
extra
paid based off
$10,000.
$2,000.
Correct.
That's it.
Gotcha.
Yes.
So,
a
but
lot
the client now has like $9,000 to $10,000 he can pull right away because that's the difference. So, it went
So
straight to cash
the
value.
client's
All this
happy.
going to be compounded.
The agent, you're just gonna get a regular commission, like a $50
But
policy.
she went from like $4,000
And she
to
thought she was
like
going to
600.
like, yeah.
Oh, so she was.
She was like, wait, I wasn't expecting this.
It goes to something y'all was speaking about earlier. You're treating him right. Now he can send referrals your way,
Yes.
or he
Yes,
can
he sent like 7
or he can
of the same type
open
of
up
people.
another
Birds
type
of
of
a
policy.
feather.
Right, you
People
just
that
get
can
more.
afford to put $12,000 into a policy know people that can put $12,000 into a policy.
This is how it works. So he was actually a referral from a guy who owns a tax office. And I showed him the illustration. He said, I got an IUL and I've had mine for like 8 years and I'm just not getting cash. And I
got
showed him the
messed
illustration of where the guy got like 8,000, 9,000 like as soon as he dumped the money. And he was like, how did that happen?
How did that happen?
And that's what happened.
Properly structured.
And now him and his mom has a tax business they've been running for 40 years. And now they're feeding us.
They're
And that's what I
sending
mean
so
by
many
like,
clients.
Build a
Just take-
relationship.
build a relationship and take care of the people because he saw that.
Doing right by people, because the client will never know. This client that said, hey, I've had my
He don't
policy
know.
for 8 years and I don't have any cash. He didn't know his agent got a fat check and he wasn't getting the policy the right way. Agents are not licensed, clients aren't licensed. Clients don't go to school for this. Clients don't study the continuing education. Clients have no clue what are you selling them, and they never will. Even if you send them all the paperwork, it's just not their specialty.
read it.
They're not going
It's
to
like
understand
60
it.
pages.
So
Yeah.
you can technically get over on a client. You could screw them over. You could do what you want, have your way with them. And agents that do that give cash value life insurance a bad rep. But the people that structure it properly take a hit on their commission, but their clients are living large.
It's just going to open the door for more business though. Because when people find out what you did.
Yeah.
I can't rock with you no more after that player.
Yeah.
Like, dang, so you mean to tell me you made my premiums high like that, and I'm not? I'm putting in 12 bands a year,
And I'm not
and
getting
I
no cash
can't
returns.
access my cash returns for the next 10 years.
Yep.
Correct.
I'm
Or 5
upset.
years, 6 years.
Yeah.
I'm cussing you out anytime
But
your name come
you
up.
don't realize
you-
it for
yeah.
years later. Like you're like, oh, maybe
'Cause you
3
didn't-
years later.
yeah.
Hey, 3 years later, can I pull out my cash now? No, you can't.
It's $20,000 in there. What you mean it's
Yeah.
$20,000?
Right, I done
I've been
paid
paying
100
12 a
grand
year.
that
Yeah.
You got like $5,000.
Yeah.
6
So you
grand,
don't
something like that.
realize it. So it's like it's important to ask questions and do business with people that operate with high morals, principles, and values, and believe that you could get wealthy without doing evil.
Yeah.
Like it's so important.
I kind of want to stay right here for a second. You said it's important to ask questions. So if there's a listener out there right now interested in purchasing life insurance, but they don't know what questions to ask, what questions should they be asking the agents that are trying to sell to them?
Somebody sent me a direct message the other day, and it was the most impressive direct message that I've ever gotten in my entire career. This guy was doing his research. He was like, I'm looking for life insurance. And that's a very common question that I get in my DMs. So I send the basics of insurance. And he's like, no, I understand insurance. This is what I want to know. And he asked me the questions. He said, with structuring the policy, if I put this much cash in, how soon will I be able to take it out? How much of the money is going towards my life insurance? How much of it is going towards my cash value? What is the interest rate on the loan? And will I be making more money on my cash value than the loan I'm going to take? Like, he asked some really good questions. What would you say they would have to ask? Like, those are very detailed. I don't know if they need to ask that, but I was like, whoa. But you just need to know, like, the basic question. I don't know if you can ask, like, is your commission going to be bigger? But like,
I mean, you can ask me. You can ask us. I'll show it to you.
you can ask.
Literally.
I want to get, if you're looking to be your own bank, maybe I want the minimum death benefit I can get so that I can put the most cash in and it can grow.
That if you're talking about infinite banking, high cash value policies, you need to say, give me the least amount of insurance so I can get the most amount of cash. Can you show me that?
Yes, that's. a
And
very
you should
good
have
question.
cash in the first year. If that's, I mean, there ain't no way around it. So if you're somebody who's doing that, that's what you need to be asking. Like, hey, is this structured correctly where I'm not paying for more insurance than I need? Because I don't want to pay for any additional insurance. I know this is the vehicle we're using. So, like, you got to get insurance. Like, don't get it twisted. That's how you get it tax-free. But I want to minimize that cost and maximize the cash value. Make sure that you ask them that. And basic stuff, what companies do you use? What's their rating?
Yeah, he asked me that too. Like, I want a company that's not going to go out of business tomorrow.
Yeah, like
companies that have been around 100+ years.
Usually, that's all we use. Companies that at least been around for 100+ years. See their track record. Because, like, when it comes to, like, whole life policies, you got something that pays dividends for 100 years straight, 5-6%. Yeah. Ask them to show you that. Because that's what you're getting it for.
They got good financial management over there. Yeah. You don't want a company to go insolvent on you. You got $100,000.
Correct.
What happens if they go insolvent? Is it just nil for you? Is there like a FDIC for insurance or something like that?
So they're supposed to have the assets in cash. So all the death benefit, they have it in cash.
Okay.
So they can't sell more
if they
insurance.
do go bankrupt, they would liquidate your policies.
Correct. So that's it. But the top insurance companies have been around since 1848, 1874. They've been around before the banks.
Yeah.
So
Speaking of
people don't know that. Like,
y'all got me thinking about this. I seen something about State Farm. Like
their rating was downgraded.
Yeah, their rating got downgraded. Is that like something that people will look at in your industry? Is something that be a concern? Like a major company like that getting downgraded? Is that something that's like, oh, okay, State Farm got downgraded because they've been taking financial losses? Would I write less policies with them, or would I try to avoid State Farm?
Yeah, if I was a consumer, it'd be something I'd consider. I'd look and see what's going on. Like I said, most of the companies we work with, they haven't had any blips in the radar. I hate to say ever, but not really. I mean, these companies paid dividends for 100+ years. So you're talking about World War I, Great Depression, World War II.
The underwriters do their job well.
So life insurance and annuities is conservative. Yeah. So like some of the car insurance type stuff, sometimes they can be a little bit more risky. Life insurance is very conservative. So they under promise and usually over deliver. And that's why they've been around so long. And that's why companies like banks put their money with them, because they almost trust them more than themselves as far as being safe. So again, it's not super aggressive. So when we talk about building wealth, you can make more money as an entrepreneur. You get investments and all that stuff. That's where you're going to make your 10, 15, 20%. That's what you do. Sure. When you put money in insurance because you need somewhere to sit it in the meantime, and you're getting 5-6% interest instead of banking at, I ain't gonna say no bank's name, but who we bank with, I know I might get sponsored one day. 0.01% is what our bank pays us. Yeah. So instead of getting 0.01, you're getting 5-6%, and you get insurance, so you got a death benefit, and it grows tax free, and you have access to the money. So now it's making 5%. You got a flip you want to make over here, borrow the money, go make your 15-20% on your flip, and then put it back, and you got your money working both ways. So insurance is not it's not the investment. I always tell people it's not an investment. It's a savings, high power.
High interest savings.
High interest savings with insurance, and it grows tax free.
And you have an interest, a death benefit.
Yep.
I got one more question as for questions that they should be asking, right? How do they know that they're not being over-insured? How do they know that an agent isn't just trying to upsell them on the highest policy? I know about the dime method. Is that one of the things that you guys do? Or is there other ways that they can know, okay, this guy isn't just trying to upsell me for the highest thing?
You just said dime method. Just say what the dime
I'll say dime is this. It's debt. So how much debt do you have? You got like 70,000 student loans. Okay, you need at least 70,000 insurance, because if you got private loans, something happened to you, it's going to go to your family. Income, how much do you make? Okay, I make $50,000 a year. You got kids that's all under age of 10, so you need at least 10 years of your income so they can grow up to 18 or so. So you make $50,000 a year, that means you need at least $500,000 so your kids can maintain the next 10 years. M is mortgage. How much is your house worth? Okay, I owe like $300,000 on it. Okay, now we have 500 plus 300 and 70,000 student loans, so we're at 870. And E is education. Do you plan on paying for your kids when they go to school? So a lot of people say no. So now this person needs $870,000 in insurance so that kids can maintain the same life for the next 10 years.
Got you.
So that you hear people talk about being underinsured. And they're like, oh, I just get me $25,000, $50,000, funeral ain't that much. Okay, cool. But if you got kids, if you got a house, you got all this stuff, you got to understand that when you're the breadwinner. So when you go, they no longer have your income. Yeah. So how are they going to survive?
Now they struggling. Not only are they dealing with the hardship of losing you, now they actually struggling financially on top of that.
Yeah, the toughest day of their life just became twice as tough.
Like good times.
Yeah, like it was already tough. Let's say you got the insurance. they still gonna cry. Like they still gonna be tough because the person they love and they, need the most is gone. Now you add an extra burden on the worst day of their life. That could be solved.
That's a long-term problem. That's like, man, I'm about to be stressing for the next 2, 3, 4 years till I figure out how I can maintain this lifestyle.
What's crazy is it's not 2 or 3, 4 years. It could be 2 or 3 generations.
Yeah.
That's really what happens.
Yeah.
Like you think it's like, no, people say this happened 30 years ago and we still ain't recovered. And it's like, just because you didn't make one decision.
It's true.
Speaking of one decision, man, you made me think about something, the story that you shared before.
I was about to say
talk about it on the pod.
I got to.
Because it's powerful, right? So one decision that your grandmother made when it comes to insurance helped influence several generations of your family. Can you talk about that, my brother?
And that's what we here for. So I always tell them that my grandmother passed away in 2012 and she left over 6 figures to each and every one of our children. And so for us growing up in Hartwell, touching 6 figures, especially at one time, is a big deal. And at that point, my parents were teachers, and I definitely didn't say we struggled. We always ate, had food, had clothes, but that we never could win with money for whatever reason. Just had not figured it out. My parents did really well raising us, no complaints at all, but the money thing was the one thing we just never figured out. So when you get 6 figures all at once, for them, it changed everything because they immediately became debt-free. They bought 2 or 3 properties that same year. So I to this day have never lived in a house that my parents own. It's years after that they got that. Now they got a couple properties, of houses that are, growing in value. And I always joke because I got braces that year, so the smile it brought me a little confidence. But people always say, like, why are you so passionate about what you do? And it's conviction. Like, you can't tell me term, whole, whatever. Like, you can't tell me life insurance is a scam because I seen it change my family's life. Like, this is what I do for a living. I quit my job. I threw my degree in the trash can. I recruited my wife to the industry, and I have other agents who are telling the same story because I've seen how it blesses and help families. And that's it. That's where the passion comes from. And I don't even know what the policy was my grandmother had, if it was, what type it was, or how much. I just know that she probably made a decision 30, 40 years ago that's still paying dividends today. Like, we're leading the charge. We're helping thousands of people. We got hundreds of agents that work with us, and they know this and they hear it. And there's so many people, too, in the same situation where they're like, oh, my dad passed, and I wish we had this, or grandma passed, and she did have a little bit, and it came in the clutch. It's like, why are we quiet about this? Why are we not having a conversation? We all been in that situation where you got that pinch, and you wish you had somebody helping you, yet we want to be quiet about what we need to do, and it's get insured. Make sure everybody around you got it. Make sure they're taken care. And if it ain't $1 million, cool. Make sure you at least got $25,000 to bury you, and each year you can improve it. You can get more policies. So like my wife was saying, we started out with an IUL. Then we got married. We got term because we was like, hey, if something happens, I want you to have enough money to run the business for the next 10, 20 years till you can sell it. And then now we're in the process of getting another policy. So it's like a starter home. You might buy a house that you're not completely in love with, but you live there for now. In the next 2 or 3 years, you can get another house. You can rent this one out. And you continue to grow and grow and grow. And if you live another 30, 40 years, you look back and you say, oh, I got like $300,000 or $400,000 in life insurance and only bought like $100,000 at a time. But I just continue to add to it like a portfolio. And you can do it. Don't think you got to have it all figured out. Because like my first policy, I was paying like $150 a month. Like, I wasn't dumping a ton of money into it. A lot of our clients is $50, $60 a month. Then you hopefully knock some savings out, budget a little bit better. Maybe you get a promotion, then you get a second policy. You add more to it, and you add more to it, and you keep doing, you keep growing. And we talking long game, guys. Over the lifespan of 30, 40, 50 years, it's a lot of money that you'll make, and most importantly, it'll be a lot of money that you can pass on to the next generation. But not even the money, it's the education. Because when they see that, they're going to say, what the heck did she do? Or what did they do? Like, this doesn't make sense. And that's when people become curious and they say, whatever she did, I want to do the same thing. That's why I'm here. People think that wealth is passed down in assets. Wealth is actually passed down through education. Because there's a lot of people who have assets that pass to their kids and they end up squandering it all.
Man.
It's the how to or what did you do, the education behind it. Like, I'm glad you gave me the asset, but how did you build this and how did you maintain it?
Yeah. And
that's what we don't pass on. So that's why we're passionate, because that's the education that you need.
Without that education, more times than not, they'll either sell it for pennies on the dollar
Correct.
or just give it away because they don't want it.
Mm-hmm.
Yeah.
Like, if you don't understand the value of it and you don't have the education to know what to do with it, what I want this for? This sound like a headache to me.
Yeah. That's exactly how it happens.
Yeah.
Then they lose out.
So I want to go, because you just talked about you guys have multiple insurance policies.
Mm-hmm.
And earlier you said something about an ROP.
ROP.
So I hear we covered the term, we covered whole life. I know we touched on IULs. What is ROP? What is that? And could you go into some lesser known products that people might not be too privy to?
Yeah, so ROP stands for return of premium. It's a term policy. So
Okay.
it is a term life insurance policy, but the difference is with term life insurance, you pay into it. When the term expires, you lose the policy. All the money you put in, it's gone, stays with the insurance company. With the ROP term, when the term expires, you lose the policy, just like a term, but all the premiums you put into it get returned back to you. No
Gotcha.
interest, but you get your money back. So it's like you didn't lose out on anything for having the insurance. You lived past the term. Congratulations on living. We're taking this policy back, but here's all your money you paid into it.
Gotcha. It's kind of like you getting your deposit back for not messing up the house you rented.
You know what?
Correct.
That's
a really good analogy.
I appreciate
like that. You got your deposit, deposit back.
Yeah.
You know how you get an apartment, you put the deposit
There you
down.
go.
As long as there's nothing broken, you get your deposit back. Or just like at a
Yes.
hotel. That's what an ROP is.
Yep.
And the term is just renting. So you rent a house for less than you would buy it. But the lease ends, you got to turn the key so you don't own it. The permanent insurance, you got whole life and IULs. They both have insurance forever. So whether you pass away at 50, 60, 100, doesn't matter when, your family's going to always get the death benefit. That's the main thing. They both have cash value. The main difference between whole life and IULs, whole life is more fixed, where you're going to make 4, 5, 6% every year. And it's like almost guaranteed. It's like a bank. Like you know for a fact what you're going to get. And usually with whole life, you're going to get more access to cash year one, right away.
Gotcha.
So when it comes to banking, that's what most people use. And so IULs, they're permanent life insurance. The way that they work, they're tied to an index of the stock market. So as the market goes up, you make money. Market goes down, you don't lose anything, but you don't make anything. So it's not guaranteed. So some years you might make 12%, some years it might be 0, 2%. And so when you talk about long-term, they're more what people use for retirement. But, I mean, whole life IULs, they're both pretty good. It's just that it just depends on what you're looking for. If you're looking for something that you know is guaranteed to make you money and you got more access to it right away, whole life is the way to go. If you say, hey, I like the upside of the market, I want to chase 9, 10% returns, IULs is the one that can give you that. So, and we got them all. Like, sometimes people ask us to tell you what's going to happen. Like, to be honest with you, no agent really knows. In 20, 30 years, we'll find out.
Facts.
To be honest with you, that's straight up.
And what's the last product? Is it annuities?
Yes.
And so annuities is basically insurance on your retirement. A lot of people don't know this exists.
Income insurance.
It's income insurance.
Like you get a small monthly payment from your insurance policy, right?
Absolutely.
Yeah.
Absolutely. So think about like a pension. Like you've been working 40 years for a company, Ford or whatever, and then once you retire, all of a sudden they'll start paying you the same monthly, whatever you were making a month or whatever. You can set that type of stuff up for yourself through an annuity. So if you got like 401ks, IRAs, old money just in the bank, you can roll it into an index annuity, and it's an insurance product where when the market goes down, you don't lose money. So it's perfect for retirement because you never have to worry about losing. So when you're in your income accumulation phase and all that stuff, some people be like, I'll just ride the wave, which to each his own. But like once you're retired, you're not making more money. So you can't afford, you can never afford to take more losses because you don't have anything coming in. Mm-hmm. So a lot of people take their retirements and roll it in that type of stuff. And that
way it's not like subject to market.
Correct. But it's still tied to an index of the market. So as the market goes up, the insurance company are going to pay you percentages of the market gains. Mm-hmm. So you don't take all the losses. You don't take any of the losses actually. But let's say it goes up 10%. They may only pay you like 7 or 8. So you don't get all the gains either, but you're still growing money and you have access to it, and it's going to pay you every single month to the day you die. So it's a way to never outlive your income. And as it continues to grow, then that monthly stipend will go up every month too. So as you get older, you need more income, you can start taking more from it. But a lot of people don't even know that exists. I read a book from Tony Robbins, Money Master the Game.
Yes, sir.
I actually bought the physical copy recently.
Bro, it's like a Bible.
Yeah,
it's not one of those read it one
thick.
time.
It's like 3 of those put together.
Yeah,
it's
absolutely.
huge.
But that was one of the books that introduced me to that idea because you hear wealthy people talk about saving, investing, and they don't seem worried. And I wonder why. Because the rest of us, we like, oh, the market tank. Like, and this is why, because they're having stuff like that where it's guaranteed to grow when the market goes up, but they don't take any losses. And if you look at how it compares,
I think it's called asymmetrical risk.
Yep.
Is what he calls it in the book.
Absolutely.
Yeah.
And he talks about it. So, I mean, you might say, Chris, I don't know you like that. I don't trust you. Cool. Look up Tony Robbins. He got like some of the top 20, I think, or 25 wealth managers in the book. They're talking about these products and they've been around for years. It's just that.
Crazy investing. There's this guy that was in Dallas, the nickel story that he did with his sons. You remember where they like purchased a whole bunch of nickels and just put it into this storage unit, and then like later they cashed out on it because of the metal that was in the
correct.
Metal.
Yeah, it was more than 5 cents.
It was worth more than the actual
crazy.
Yeah, and this stuff has been around though. Like annuities have been around since 2,000 years, since like the Roman Empire.
Benjamin Franklin had an annuity, and when he died, he left the beneficiary
to Philadelphia.
And they're still living. Their city is still operating.
That annuity
off that money.
didn't roll. He gave it to 2 cities, and one of the cities it didn't run out to like the 90s.
He left the city as the beneficiary.
Yes,
that's crazy.
And
so that paid him for like
that
200
annuity
years.
was paying for the city for 200 years.
That's crazy.
Like people don't know about these products at all.
Yeah. It
was crazy. Like it was.
So you literally buying income.
Yeah, like you're buying income for the future.
Continue to grow and guarantee.
You could leave it to your kids. Imagine if you're taking care of your kids for 200 years, or a church. Like sometimes people don't have kids or a spouse, but you could leave it to your city
or leave it to a church. You can leave it to a charity. Whatever. Maybe you got a business and you want to leave the money behind to it so you can keep, funding. But
that's an interesting concept. I didn't think about that.
You buy money. You buy you buy cash flow
for pennies on the dollar.
Definitely a good option for somebody that's like entering their retirement phase of life.
So
older people.
I guess that kind of goes into another topic I wanted to get into. Where we were talking about people dying kinless.
Oh yeah,
so,
yeah. That's like
I was going to ask if like say there's someone who don't have any heirs or anything like that. What would be a use case for life insurance for them? Yep. But as you guys just stated, you can still leave money to different things, or like even. Can you leave it to like your community as well? Like, let's say you might live in a community. You're like, I know that this has been messed up, but I want to donate all of this and fix the roads and stuff like that.
Yeah.
So like, there's
crazy.
I mean, personally, even though you don't have kids, with life insurance, you can use it if you became critical, chronic, or terminally ill. So like, let's say you had cancer. Would that be a rider? Some companies is rider, some companies just include it. Most the companies we work with is included. So you may be saying, I don't have kids, I don't need life insurance, but what if you got cancer tomorrow? You had a stroke or heart attack, and
you don't have family. Like people are like, I don't need life insurance. I don't have kids. I don't have a spouse. Well, what if you get cancer and you don't have income and you don't have anyone to take care of you because you don't have kids or you don't have a spouse? You don't have no money either. Yeah. You're gonna need something. You're gonna need insurance even more than somebody that does have a family, because at least they have people to rely on to take them in. You don't have anyone to take you in if you get sick. So you better have that money. Yeah.
And so this is a fact, 70% of bankruptcies are due to medical bills.
Yeah.
So like for everybody here, if you make it to 60, 65, 70, the thing that's more likely to mess up your wealth is something medical. So again, we pray against it. We hope it doesn't happen, but plan for it just in case. Life insurance could do it. You got the cash value that you mentioned. Like, hey, you can also use it as a savings where it's growing tax-free, getting you interest. So that's your money that you use while you're living. That's yours. So you might not get it for the death benefit, but you still can actually benefit from the policy itself. And then lastly, I mean, if you got charity, if you got a church, if you got a community, you might have some nephews, you might have some cousins, you might have, I don't know, you might want to start a scholarship. Like you can leave all of that stuff as a beneficiary or a trust or something like that. Yeah, I mean, we can't, none of us can take it with us.
Yeah.
So like, and we all know that the government is proving that they probably gonna mismanage it. So like,
that's a fact, because the Pentagon can't tell you what $5 billion went.
Yeah, so like I'm gonna use as much as I can while I'm alive.
Piss me off, dog.
I don't know what happened to it.
What? Poof, poof, gone.
The IRS would have told me. Go to jail.
You going to jail for life.
Go do not collect
for life.
Somebody gave us $40 last during Christmas when we visited our family.
Oh, yeah.
And we got to the hotel and I said, what if I felt like I lost it? And so we had to stop everything. I had to find
where's that
$40.
money? Because it was
so
cash.
you mean $75 billion, you just all of a sudden don't care.
You don't care.
Like, no, I'm looking for $40 still to this day. Like we was about to go eat. I said, hold on, I
That's
gotta
why I
find
don't deal with cash because I'll lose it.
I gotta find this first.
Hey, I'm
Ever.
I can't do
I
that.
don't need no card. Let me
What?
Apple Pay.
Apple Pay saved my life.
Let me
Cash
tap
at me,
quick.
sell me. Like, yeah, don't.
Seriously.
I'm with that.
So, Chris and Erica, Jayla, you had
It's
another
one
question?
last question.
Okay.
I know we talked about life insurance in this insurance. What is the I forgot the name of it, but we talked about this on Instagram before. Whenever you die, final expenses. Can we talk about final expense insurance? Because I know whenever you actually have like a whole life policy or whatever, you have to wait for them to clear that money and everything. But the final expense policy, you're able to pay for the funeral up front and everything like that. Because I know like the average funeral cost right now is like 7 bands. If you want to get cremated, it's still like 6 bands.
Like, yeah.
So
It's
it's
going to be a tree.
Yeah.
I'm pretty sure it's still gonna be around there somewhere. It costs to die.
It costs to die. That part. No, final expenses are so popular. Like people our age are getting final expense policies on their parents. So we don't necessarily have like direct access to speaking to a lot of elders, but we do. Yeah, because we're doing Zoom and everything's social media, right? So they're not on this. So our target market.
Looking at the phone like this.
Yeah, they're like, oh gosh,
With
we
them
have
big
met
bubbles.
with some of them.
That's a disadvantage to
and
Zoom.
it's up their nose. It's like, can you hear me? No. We don't do that. We're like, bring your grandson on. I'll talk to him about it.
Yeah, let him explain it to you.
Yes, so we're helping a lot of like 30, 40-year-olds to get educated about, hey, you should look into getting a policy with your parents. Bring them on the Zoom, teach them how to set it up, but working together through the generations because not that $7,000, $10,000 for a funeral is like a life-changing amount, but who has it just to drop?
You gotta go
When
sell
death
them fish
happens,
plates.
you have to do fish plates, GoFundMe's. So it's nice to have a little $10,000 policy on your parents. For sure, you should have it. So it's a whole life policy, and those types of final expense policies, they're very lenient with underwriting. So maybe, a 76-year-old person that has had cancer and struggles with certain ailments, they might not be able to get approved for typical life insurance, but final expense, we have a guaranteed issue final expense. So it doesn't matter if you're on your deathbed right now, you will get a policy approved instantly, 100%,
Really?
no questions asked. Like, yeah. So, and you usually can only get up to like 30,000. It's whole life, it's permanent, so your price never goes up, which is nice. Depending on your health, there might be a 2-year waiting period. So if you pass before the 2 years, you get a refund of all your premiums plus a 10% bonus. But if you live past the 2 years, you get the full death benefit. So, and it doesn't matter your state of health. So that's what's really popular about final expense is that the health is not such an issue like regular life insurance.
Yeah, and it's so I'll be honest, it's like the least sexiest policy out there. Like it's you basically saying, hey, I'm getting older and I need something.
Yeah, I just need
I need
some
10, 15,
coverage.
20,000. I need to make sure
My
we're
time
being
is
real.
coming.
Whenever the time does come, my family not out here selling fish plates and
This is taken care of.
asking people like, hey, can y'all donate so that
Correct.
we can make sure that
Yeah.
our loved
Correct.
one had a proper send off.
Yeah, so you might not be paying. You ain't gonna be paying the house off with. Well, I mean, it depends, but I mean,
you're
you're
not even on that bleak of a situation. You ain't coming out of your own pocket.
Pocket,
Yeah.
right?
Sure,
Yeah,
10, 20
And-
grand for a funeral.
And like she said, the best part about it is it's meant for people who usually 55, 60, 70. So you don't have to do blood in you. You don't have to do all the other stuff. It's more or less like, are you who you say you are? Like, are you in the
Instant
hospital right
approval.
now? Or, like,
Easy.
it's very easy. And I mean, I have another story like that. My dad passed and we couldn't find his insurance policy. I know y'all like, Chris, you're in insurance, but it's a long story. But yeah, in the moment, we had the money, so we just paid for it.
Mm-hmm.
Like, but we dropped like $8,000 to $9,000 on our card at the time. And we just happened to be fortunate that year. That was the year we started taking off, so we started making money. But like any other year in the past, he
Yeah,
might have had to wait a
I
couple
don't
of
know what
days,
would
you know what I'm
have
saying? Or GoFundMe or, raising money. And so like, I just know, we always say this, is it easy to raise $20,000 in a day or just pay like $70 a month?
Yeah. It's much easier
It's
to pay
just much
$50 a
easier.
month than to try to find 20 grand in a week.
Yeah.
So
and
just
so like,
pay
that's
it.
how you got to think about it.
You have to think
guys.
about it like that because it's going to happen. Like the only two
gonna happen.
guarantees in life is death and taxes. You're going to die. None of us are making it out of here alive. So plan for it. Like set your family up for success.
Facts.
Yeah.
It's facts.
Yeah. It is what it is.
Yeah.
I want to get into some of our last questions.
Yeah.
Let's do it.
final questions.
Let's go.
Yeah, you know, you already know it. You already
not
know
the
it.
segment.
You got it pulled up.
I got it on my phone.
What you got?
Oh,
What you got?
gosh, here you go.
So okay, this is a little segment we doing. You know what I'm saying? Brought to you by the Private Small Business Society. Shout out to our people there.
Hey.
They over there focusing on educating business owners on how to run profitable, successful small businesses, small business professional development education. And what we doing with this is called Standing on Business. We just gonna ask a couple
10
questions
toes down.
about business, just general.
We got
10
5
toes
questions.
down.
Yeah, we're gonna do 5
My
questions.
favorite subject in the world.
5 questions. All right, so I'm gonna let my brother Jalen start it off.
Okay, so the first question I got for you guys, make sure you can't see my computer.
Get a little Jeopardy music.
Stop it. Jalen about to
Which
stump
of the
us.
following best describes market segmentation? And I'm going to give you 3 different answers. A, dividing a market into dissecting groups of buyers in different needs. B, the process of setting prices for products. Or C, creating one market strategy for all customers.
It's not C. I would say
I'll read.
A.
Y'all show final answer.
Final answer.
Pay them, man.
Hey, let's go.
Okay, one
Not
for one.
It's not
Let's
C.
go.
Oh, we didn't know we was getting quizzed.
I like
Okay,
this,
let's go.
This is a good idea. I love
Throw
it.
it at the end. You know what I'm saying? Like,
We got to deliberate. 2
I'll let you ask the next one.
Okay,
Dave.
let me. Oh no, it's not pulled up on my phone.
Oh,
you got
man.
the next one.
Okay,
You got all of
so
them.
I'm gonna be your game show host for today.
Let's go, Jalen.
The next question: what is the main goal of a customer relationship management?
Ooh, I love CRM, man. That's my
Oh,
wheelhouse.
okay.
I better
She
get this
know
right.
it.
I just built one.
To reduce the number of employees. That's A. B. To improve customer relationships and satisfaction. Or C. To focus solely on new customer acquisition.
Man, all of them can.
What was B again?
B was to improve customer relationship and satisfaction.
A was.
To reduce the number of employees.
Not necessarily. I mean, it can.
I
It's
would say B.
supposed to
I
be
mean,
satisfaction.
It can do all of it,
Yeah,
but I
but
would say
it's
B.
meant
The
to.
purpose is to improve the customer experience.
So you going with what?
B.
What would be?
B,
y'all
Jalen.
correct. 2 for 2. Yeah.
I was gonna, because I'm like, it's done all of that for us, but the purpose
purpose.
is to improve the client experience for sure.
Okay, I'm about to throw y'all a curveball. We never asked this one yet. In project management,
I do
the
that
critical
with
path
videos, I got the
is.
questions now.
I actually just learned about
man.
this too.
Oh, see?
The critical path is the most expensive path through a project. B, the shortest path to complete the project. Or C, the sequence of tasks that determines the minimum project duration. And I can give y'all the answers again. A,
Not A.
the most expensive path through a project. B, the shortest path to complete the project. Or C, the sequence of tasks that determines the minimum project duration. I'm just going to say critical. Think of it. Critical path.
It's a path. It's not tasks.
What was B?
But it's critical.
I was thinking. What's B and C again?
B.
B is the shortest path
The
to
shortest
complete
path.
the project.
It's critical to complete.
Or C, the sequence of tasks that determines the minimum project duration.
Because minimum project. B and C are asking for the same thing. Like, how can I have the shortest project deadline? But C is asking for the tasks, and B is just like, what's the path? Which the question is, what's the path?
The
But
deliberation.
tasks are
I love the logic breakdown here.
the tasks are
Man, I wish I
critical.
had the Who Wants to Be a Millionaire.
E gonna have to splice it in.
The only thing I don't like about B is you can skip steps.
Oh yeah, you
Sometimes
gotta be
we
more
shortcut.
detailed.
Yeah.
Critical path. I don't know what you want to go with. We gonna flip a coin. Can we phone a friend?
Yeah.
Dr. Jake.
You think it's B?
Yeah.
Is
not
B
very
your final
confident
answer?
with B, but we can go with C.
Let's go with C.
C,
is
final
correct.
answer. Oh, hey, 3 for 3. I the best score so far.
Let's go.
All right, I'm gonna add my favorite one. You know what I'm saying? Know what I'm saying?
Gosh.
I'll let you take the last two since your phone pulled up.
Oh my
So,
gosh.
which financial statement provides a snapshot of a company's financial position at a specific point in time? We have A, income statement, B, cash flow statement, C, balance sheet, or D, equity statement.
What's the question? At a specific point in time?
Yeah, which financial statement provides a snapshot of a company's financial position at a specific point in time? And I can read those back for y'all if y'all.
Paula would be so disappointed that we don't know. We have people that deal with this for us.
That's a key business lesson.
We hire people for this.
This is the first thing we hired.
This is
when we
the
talk about
first
delegating
department we
taxes,
hired.
CBA.
So the options again are income statement,
All of these two.
cash flow statement, or balance sheet.
Income statement, cash flow statement, or balance sheet. I feel like balance sheet.
Which
gonna
statement
say balance
provides a snapshot of a company's financial position at a specific point in time?
If it's a specific point in time, though, balance sheet is just old. Well,
I guess the income. Like, what's the income right now?
let's go with income statement.
It was C, balance sheet.
It was balance sheet.
And that's
Yeah.
the one we both were thinking.
But it's cool that y'all also mentioned that the first thing y'all
I
said was
don't
this is the
deal
first
with
thing we
this.
hired
Because I know, and I don't want to spend time learning it either. She's
I
so
like this
perfect.
stuff, but it's not my thing.
I think that should bring up the last question then. So whenever we're talking about SWOT analysis, right? What does the W stand for in SWOT analysis?
Weaknesses, and we know them all, and we've hired them out,
Ooh, come on, give it.
and we have hired them out.
There we go. I love it. I love it. I love it.
Hey, y'all 4 for 5, so y'all
4 for 5. They stood on business. You know what I'm saying?
Yeah.
80, so that's passing. I said.
We got 80%. We passed.
I love it.
I love it. I love it. Okay, that was standing on business always, y'all. That's
again,
that's
I
brought
like
to you
that.
by the Private Small Business Society. If
was
you're a
fun.
business owner who is, like we kind of talked about and alluded to earlier, you're somebody that got into business, you were influenced and you got started, but you really kind of don't
Didn't have the
the skill
skills.
sets, and you need some more training and knowledge. That's what the Private Small Business Society is all about. Our partners over there are educating the next generation of small business owners. Because, man, look, we need it, dog. The state of small business is bleak. I definitely suggest y'all check out that episode if y'all have not already. But now let's get to our last little rapid fires. You know what I'm saying?
Last question.
We got our
Very
few.
simple.
Y'all sneaky.
So this one of mine that I always love to ask everybody. What's one financial principle that you live by that you would like to share with the audience?
For me, I think I give you two. One is this: you can only save so much money, but what you can make is unlimited. So sometimes people try to like pitch pennies and thinking that's gonna get them free, and it's not. Like think about what's available as opposed to what's not, because you still got to eat, you still got to live somewhere, you still got to drive something. So like you're always gonna have expenses and money coming out. But there's no limit to there's a limit to how much you can save. There's a limit to how much you can make. No limit to how much you can make. So think bigger. But two, wealth is a ratio. So like start looking at it as a ratio and figure out your numbers. But if you spending 100% of what you got bringing in, that's terrible. And if you can go from 100 to 99 the next month to 98, start thinking like that, because then you flip it. And that's what happens. People are just spending way more than they're making. And it's just like, hey, man, you might only need 50, 60,000 to survive. So just spend that, but still go make the 100,000, 200,000 and save it up for a rainy day and enjoy it. Don't feel like you gotta spend more. Just make it and live off of your ratio. And don't ever get lopsided on that. Like don't go over it.
That's good.
It's just discipline.
Yeah, I would say like for me, I've reprogrammed my money blueprint over the years from going from more of a scarcity mindset to abundance. So I I always reverse engineer what I want. So I don't like when people say I can't afford this. I always challenge them to say, don't make that statement, because statements close the mind. When you say I can't afford it, it's game over for you. You will never afford it. But when you ask yourself a question, it opens the mind. So instead you should say, how can I afford this? And then it starts letting you be creative with how can you get it, and it makes it possible at least. So I'm big on budgeting. Like, we do our budget with our accounting team and with each other all the time. We're checking every little box, but it's not, we never really do it from the standpoint of cutting. Like how Chris said, like, it's not like, can I cancel the Netflix? Like, $10 a month is not going to have any impact on your wealth. No,
your
two
standard
less
of
Starbucks,
living.
it doesn't matter. Like, that's not what's make or breaking you. And you can have the Starbucks if you're willing to work for it, and you have a plan to work for it. If you put in a side hustle, take extra hours, like whatever. Like, my mind thinks, how can I afford it? So I always kind of think, what do I want? Is it a major purchase that I want? Is it a certain income goal that I want? And then I reverse engineer and do the math to what I need to make and the activities I need to do to make that income, to make it possible. So for me, it's not like a cutting back or a budgeting or a savings tip. It's more of like, go make some more money. We're literally in the wealthiest country in the world. There's so many opportunities. Go and make some of all this money and live the life that you want.
Yeah, and I know it's supposed to be one, but to piggyback off of it real quick, we're heavy in what's called the SME. I think we talked about it last time.
We invest heavy in the SME 500.
Oh yeah, the S&P 500
pays better
yes,
dividends than any
So,
S&P, anything, any
if you
index.
if you get a 10% return from the stock market, guys, that's a pretty good year. And so if you save $1,000, that means you're gonna make $100 at the end of the year. When you invest in yourself, how likely are you to make another $100?
Yeah.
It's very easy.
I'm about to make a 1,000%
So we
return.
think that's the best
You know who
investment.
gave a really good example of this? Alex Hormozy.
That's where I got it from.
We love
He gave an
Hormozy.
example of it, like where it was like, if you're a person making a minimum wage and you take, like you just said, $1,000,
phlebotomist test or something.
you invest it, that doesn't do nothing for you really. But you take the phlebotomist class, you could damn near triple your income.
You start making
weekend.
20.
Yeah,
You
in a
start making
weekend.
$20-$25.
Or even like what
An
we
hour.
do, insurance adjusting, right? You get
Yes.
a couple licenses.
Literally.
You go get an insurance license. You
License.
can then increase your income so that you can invest more, because two things that investing only helps you in two ways, right? You got to have compound interest, like time. And you're going to have to put money in.
You need time
you
and
got
money.
both.
You got to have to put
You
money
need
in.
both.
And if you want to reduce the amount of time,
Thank you.
You have to
gotta
put more money, but
Thank
you ain't got no
You-
money
I-
to put in.
I've
Like,
not
that's what
figured
people
out how to
think.
explain it. but
The
that's
money
it.
like
It takes
comes
time and
out of the
money. And
sky.
if you don't have money, it's gonna take a long time.
You're not getting anywhere in the stock market with $100 a month.
And that's
and that's an
It's
argument that
time.
we had recently with somebody in the comments on the page, because we were talking about like building an emergency fund. Like, the concept of building an emergency fund and investing while you're doing it is not a great idea, because if you're trying to build an emergency fund, and you need time in the market, I 100% agree with that. But if you diverting your efforts, if you only got $100 extra to your name a month, $200, if you putting $100 in an emergency fund and $100 investing, that $100 investing not really doing as much for you
not
as you
doing
thinking.
much.
But whenever you get that 6 months fund, now if some shit pop up, now I don't have to go dig over here to get this money. I got this money sitting here already, and now whenever I'm investing, my money that's investing can stay invested.
investments are not savings.
Yeah, it's
So like
totally different.
usually if you dip it into your investment, it's costing you to have to do that.
Yeah.
You know what I'm saying? If you got like a 401k, I ain't saying you can't get the money, but then now you're paying a penalty for getting it too early.
Yeah.
So like separate the two, and either you saving or you investing. And I ain't saying one is better than the other, but like they're two different things. So whatever you focus on that and knock it out. Because like you said, 6 months of saving ain't probably gonna make that much of a difference in your retirement in 30 or 40 years. 6 years, yes, but 6 months, probably not. Go build your emergency
It can change the position you in financially.
today.
Exactly.
You need to survive today.
Cause like you over here, the worst thing having to do is liquidate investments too early because you put too much money.
They
into
slap you on the
That's
wrist.
it. They
It
get
costs you more than you make you at that point.
You
Pay
missed.
that,
You missed.
more taxes on that.
Yeah.
Too, because
Taxes,
short
fees,
term,
all of it.
People be borrowing for
You have
401k.
to be
They always
prepared to go into the
they always tell like the fees that I paid in taxes was more than I actually borrowed. Like I end up paying the government more than I got from it. So ideally, that's not the way to do it. You want to have the emergency fund because emergencies do happen, and so that's the foundation of your house, and then add the chandeliers and everything else. But you got to at least have the
above
foundation
and beyond.
for sure. But SME 500. I mean, my first job was paying me $45,000 at Travelers. 6 years later, we had a $42,000 a month. You don't get that in the S&P.
From investing $200 in an insurance license. Like, if you would have put that $200 in the S&P, you would have made $10 that year. We made $42,000 in a month. Like, so we built a 7-figure business from that $200 investment. So it's like, you got to be wise about where you invest.
Invest in yourself.
Yeah,
build your skills.
There's
build your
no
value.
better investment than investing in yourself.
That's it.
Your knowledge.
You can't control the
doing
markets, but you
something
can
with
control yourself. So
yeah, for sure.
I love that. Okay, so my last 2 questions. First one, are y'all frugal or are you a flexer?
Oh man,
we super frugal.
Yeah, frugal. Yeah.
I mean, we will spend $200-$300 on a steak. Like we'll go out to eat.
We were just talking about this earlier. We eat. We travel and we eat.
But like outside of that, I shop on Amazon.
Yeah,
I went viral this year with Walmart. We always joke. Every time I go viral, I got a Walmart T-shirt on. It's all wrinkled up and everything.
And this little Walmart tee, like literally.
That's what people like from me.
All of his, he's got 500,000 followers on TikTok, and all of his videos are in a Walmart
or
T-shirt.
Amazon, like that's
like, yeah, we're not
shirt.
flashy for sure, but we will not
travel and
expense on traveling or eating. Yeah, like I'm gonna pull up for the food.
Like my last mentor, he told me you need to get a car.
Oh
like,
yeah,
he was
made
like, bro,
us
like,
get our Mercedes. He was like, yeah,
you make enough money. You
embarrassing us.
2012
he was
Kia
like, y'all
Optima.
making $40,000 a month and you're driving a Kia Optima. So now we're like, we look back on like Drake's song.
Back in the day,
Optima days. Like we look back, but they had to force us out of that. So yeah, we are very frugal.
You know what? They didn't force us. Like I had like $2,000 or $3,000 worth of damage internally. And I was like, all right. I mean,
might as well get a new cover.
Yeah. But honestly, I was still pushing it. I was going to push it. And then I got a good offer for it too because there was a shortage in cars in 2021. So I sold it for like $4. So I'm like, I did. Otherwise, I would still be pushing it probably.
And my last question, my favorite question.
Yes, sir.
Do y'all have life insurance?
Plenty. We got life insurance for days. You need some?
You want me to be honest with you? One of my sales techniques is I show my policies.
Yeah, we pull up our IUL, we pull up our cash value. This is how it's growing. This is how it works. We show our clients. Like we're very transparent with them. Mm-hmm. We're like, yeah,
that and
our whole life, everything.
Yeah, and I show when I got it too. I wasn't married, I didn't have kids. Mm-hmm. I didn't get paid. Some people like, can I get paid off my? Like for me, it was just I thought this was a wise thing, so I did it.
Yeah, we just pull up our portfolio. These are our term policies. This is why we have them. This is our IUL. We got it at the beginning. It's long term. This is our whole life. Put $40,000 in lump sum. Like they see the money, how it grows. Like that's one of our sales tactics is like being transparent with the client. Like we have what we're trying to sell you.
Yeah, and not only that, she wasn't my agent. I'm not her agent, so I didn't get paid. Our first step, she didn't get paid on mine.
Policies. It's just like we went.
It was all like this is what we think makes sense for us. And take care of our family. So there was no commissions on that for us.
We didn't do it to make commissions. It was just like
it never crossed my mind. I mean, people ask me all the time now, but like at that time, it was like this is the right thing for us to do. Mm-hmm. So that's it.
Yep. That's what's up. Yes. Well, Chris and Erica, I want to say thank y'all so much for coming.
Good to see y'all. Good to see y'all. Seriously,
good to see y'all again.
It's been a while.
Definitely
too long.
It's been like over a year.
I gotta pull up on y'all in Houston.
Come next weekend. Jaylen's coming next weekend. We having a time.
Let's go.
It's gonna be it'll be a time. That event's gonna be lit.
Come on through.
Come on.
Appreciate y'all, man. Seriously, what y'all doing? Good to see y'all back active too.
Let people know where they can follow you guys, where they can keep in touch if they want to, get some mentorship, any of that.
Oh, yes. So for anybody that wants to follow us, my Instagram, Facebook, TikTok, everything is my first and last name, Erika Cobb _chosen, ErikaCobb _chosen. Chris's is Chris Cobb _chosen, CHRISCOBB _chosen.
TikTok,
yeah,
YouTube.
We're the same on everything. But for anybody that wants to get into life insurance industry, whether you want to become an agent, whether you want to become a client, if you want to become an agent, you can text the word webinar to 346-701-4765, and we'll invite you to our webinar that we've got coming up to explain how to become an agent. And if you want to become a client, you guys can text the word wealth to that same number, 346-701-4765. We'll send you our calendar so that you can book some time to get a free consultation, learn about policies, everything that we talked about today, and get a chance to meet us.
That's it. We always say many are called, but you guys are chosen, so hopefully you love it.
We are chosen.
I love it. I love it.
Well, again, Chris, Erica, thank y'all so much for joining us.
Thank you.
Wealth Builders, we gonna wrap this one up, man. It's been another fire when y'all make sure y'all do what y'all gotta do
Leave us that 5-star rating and review.
Don't be a hoe. I already told y'all. Don't be no hoe ass nigga now. You done sat here, you done listened to this whole podcast.
Yeah,
you got some valuable information.
Yeah.
You done probably shared it. Yeah, you done shared it with your mama, your cousin, your sister, your brother. And you couldn't even leave a like or a rating or write a little, hey man, this was helpful. Come on, man. Do that for your boys. You know what I'm saying? Help us continue to grow the show. But until next time, y'all. You already know the vibes. This is David with Black Wealth Renaissance signing out.
Peace. You can't cash it out.